Good morning, currency traders. Como talibou? Jumbo. Nihama. Namaste. Guten Morgen. How are you this morning? Let me remind you, the trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results, but please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. So who's in the house? Let me know where in the world you are from. This is where you type in like the country or something. Where are you from? Eh? Guten Morgen. Oops, whoa. Hey, I got a weird new mic, or camera. Anyways, hey, my name is Wayne McDonell. I am the Chief FX Market Strategist for TradersWay.com. Thank you very much for being here today. If you are new to these webinars, this is about education. I'm going to preach to teach because some of you never had this. I've been doing this webinar with FX Street for 161 months. That's almost 14 years, you all. And 14 years ago, FX Street and I got together and we said, let's do the most amazing educational webinar. Even webinars were new back then. That there ever did was. And we picked Non-Farm Payrolls because it was the craziest time. And then we said, you know, most webinars are 45 minutes, some are an hour. Let's do like, 3 hours. So we said, well, we'll take the most crazy volatile time of trading and we'll use it as an opportunity to educate. Now, the first part is I get to educate you. Second part, back then, I don't know if it's still the same. I don't surf the internet looking for Forex help or something. But back 15 years ago, most of the products and services out there were kind of scammy, and a lot of them were around getting rich quick by trading non-farm payrolls. Hey, look at me, I made $10,000 in only 4 seconds of trading non-farm payrolls, right? Look at me, I drive a yellow Lamborghini. And so we thought, well, if you're with me, then you're not with them, and that's a double whammy in a good way, right? So that's how this all started. The gathering of minds, if you will, between FX Bootcamp and FX Street back then. We said, let's make it amazing. Let's make it ridiculous. Let's make it massively educational. And let's do it when the markets are crazy volatile. And let's do it so that it's an opportunity to be in shining light. Well, the rest is sort of a world of darkness. So anyway, so this is sort of how we came here. And perhaps you've been to this webinar before, 161 webinars, right? I've been trading Forex longer than your last guru. So anyways, that's pretty cool, right? So what do we do? What is the raison d'etre? Feel free to ask questions. You're the boss. I can cover technical analysis, fundamental analysis, trader psychology, how to trade like a professional, how to trade like a business. I've been doing this a very, very, very long time. Okay, so we can talk about whatever you need to talk about. Second thing is make sure you treat everybody in the chat here with dignity and respect. This is professional. You're in my office. You're in their office. Just do me a favor. If you're a heckler and stuff, just go somewhere else or jump off a bridge or something. But let's keep this positive and focused on helping each other and maintaining this wonderful community that we have here at FX Street. So I'll tell you, 100,000 years ago, I came across FX Street and knew I was home. Okay, so thank you, FX Street. Imagine that. Hosting this particular webinar. I've been doing stuff with FX Street longer than 14 years. So thank you, FX Street, just for hosting this one webinar with me for 161 months. That's pretty cool. And then thank you for being here. I know your time is valuable, so my aim is to give you as much as I possibly can in this time. If you could, two things. Visit tradersway.com. They're a foreign exchange broker. They want to earn your loyalty and respect. They have fast execution speed, low spreads, amazing swaps, world-class customer service. Takes you 30 seconds to open a demo account and test it out. See if you like the back office and all that kind of stuff. Then here's the thing. Download MT4 if you don't have it. Okay? When you're done, if you go to charts.fxbootcamp.com, you can download all my chart templates for free. Like the ones behind me, they look like this. Okay? So if you like all the tools that I use to trade every day. Now don't say like, oh, there's the 7 or 8 cool things that Wayne uses every day to trade. And by the way, I haven't changed the way I trade in the 14 or 15 or 16 years I've been doing stuff with FX Street. I've never changed the way I trade. I don't have something cool and new to offer you. I don't have an exciting new method of the week, funny method of the month. I've been doing the same thing every day for like 20 years almost, right? So you can have those tools. Now, don't think of it as like the 7 or 8 things that Wayne has found that works. Think of it as that I have found the 10,000 things that don't work or are redundant, or when you install them into MT4, they just don't work, they break, or just sort of completely useless, smoke and mirrors nonsense. I found 10,000 of those, and I'm not giving them to you. And I have found that the few things that I need, there are not very many things, but I got all the right settings and all that, and boom. So there you go. Compliments of the firm. Again, that's charts.fxbootcamp.com. Okay? So go to Traders Way, download, open an account, download MT4, go to charts.fxbootcamp.com, download my chart templates, install it into your MetaTraders account, and golden. Okay? Cool. What currency should we focus on? How about all of them, Kula? Okay? How about this, Kula? You ask me, and I'll do it. So let me go back. Let's reaffirm something. You're the boss. I'm simply an experienced currency analyst and trader and strategist, and we can talk about whatever you want to talk about. Okay? That's my pledge to you. Now, that being said, the event-driven strategy that I use during events like this. Now, is it what I do all day, every day? No, I don't trade high volatility events all day, every day. It's just scalping the news. So I'll go over that. Then the news come out. We'll have volume and volatility. By the way, CAD and dollar pairs are going to move. So maybe you just do that. Maybe you do CAD instead, right? Okay, great. Then, after the volatility wanes, then we'll have some time to talk, maybe about what it all meant and stuff like that in the aftermath. Now, I think it's going to be a neutral, okay? I think it's going to be a neutral NFP number. Like, I don't think it's going to be good. I don't think it's going to be bad. We do have Powell talking today, I believe. And as he flaps his gums, he needs to say something because we have a Fed meeting coming up. And there's actually a rule. I don't know if you know this. There's a blackout rule where as you get close to the interest rate decision or announcement, if you get too close to the FOMC two-day meeting, as an official of the Fed, whether you're a president or you're chairman of the board of governors, you're not allowed to say anything anymore. So this is his last opportunity to say something before the Fed meeting. Is he going to cut 1 time, 2 time, 3 time? That kind of stuff, okay? So that could actually move the market more than anything today. But I forget, I don't have that calendar in front of me, but maybe you guys could look it up and tell me what time JP is talking. 2 o'clock, 3 o'clock, 4 o'clock, 5 o'clock, 6 o'clock, 7 o'clock, 8 o'clock, 9 o'clock, 10 o'clock, 11 o'clock, 12 o'clock, 13 o'clock, 14 o'clock, 15 o'clock, 16 o'clock, 17 o'clock, 18 o'clock, 19 o'clock, 20 o'clock, 21 o'clock, 22 o'clock, 23 o'clock, 24 o'clock, 25 o'clock, 26 o'clock, 27 o'clock, 28 o'clock, 29 o'clock, 30 o'clock, 31 o'clock, 32 o'clock, 33 o'clock, 34 o'clock, 35 o'clock, 36 o'clock, 37 o'clock, 38 o'clock, 39 o'clock, 40 o'clock, 41 o'clock, 42 o'clock, 43 o'clock, 44 o'clock, 45 o'clock, 46 o'clock, 47 o'clock, 48 What's up, Imad? Okay. So FX Pipper, what do you want to talk about? Risk and money management? Yeah. Well, yeah. That's a whole course we could talk about, huh? So anyway, so that's that volume and volatility come out. We have 3 hours today to work together. Okay? So that's cool, right? Cool. Now let me ask you, how many people have already downloaded my chart templates? Just want to know who's in my crew. Let me know. There's a bit of a lag. YouTube is laggy. So let me move on.com while you do that. Okay. So can't go full screen on this. I probably do better, but yeah, we'll leave it there. Okay. So take a screenshot. This is the chart setups that I use, and I'm going to explain them to you. RJ for sure. Saya for sure. Jimmy, yeah. Manipur. Raza, I downloaded them 5 months ago and working amazingly. You're welcome. Namaste. Moderator, could you post the link? I tried posting it. Of course, I'm blocked. Why do you block me? Why you block me? I'm a presenter. Why you block me? So it's charts.fxbootcamp.com. Okay, Samuel? They're great. Cool. Yes, been doing this. Right on. Thank you, RC. Oh, thank you, Forex Pipper. 12:30 ET. Okay, so that's that's 2 hours after my webinar. So let's, you mark that down, guys. You're going to have sort of a two-boom day. We're going to get a lot of volume and volatility around non-farm payrolls, although I believe it's going to be neutral. So it'll pop and stop, most likely. And then the big one is going to come up. The Jerome Powell one's going to move the market, guys, because he's going to confirm or not confirm, which is even crazier, about rate cuts. Oh, thank you, moderator. Bravo, 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 bravissimo, bravo, bravo, right? Or as they say like this, let me give you a big high five. You have to do it this way. Let me give you a big high five, moderator. Oh, big high five, moderator. Oh. All right. Cool. How do we know? Why would you need to know that, Valerina? Let's say, Valerina, I'm the worst trader in the world. Okay. I am absolutely poor. I live in a hut. I have no friends. I don't own a car. And I'm a scumbag. Let's just assume all of those things, okay? I'm bad for humanity. But I know a few things about trading. So let's just do that, okay? Okay. And by the way, yeah, we'll leave it at that. Okay, so you got the screenshot. So let me go over this, and let me tell you how this works. You know, Roger, the 2 nights ago, I got like 4.5 hours sleep. The night before that, I got like 4.5 hours sleep. I got like a rocking 7 hours of sleep because, you know, non-farm payrolls. Normally, I drink myself to sleep, and then I wake up and stimulate myself back to life. No. So, yeah, I got it. Yeah. I got it, man. It was close. I got decent sleep, so thank you. Okay, so let's go over the charts first before we do the plan, okay, Lynn? Okay, methodology first. Then I'm going to go over how to scalp the news, aka high volatility event driven strategy. What you're going to do is listen, take notes, and you're going to click the thumbs up button. Okay? And I think it would be appropriate right now to subscribe to the FX Street YouTube channel as well. Okay? I think these are just like appropriate things to do. Meanwhile, let's move on. Okay. So, let me get my drawing tool. Okay? Let me get my drawing tool. Let me. Where's my drawing tool? There. Oh, it's way down here. Okay. These two moving averages. The blue one is a 55 EMA, as I already told you over here. Okay. So we use the 21, 55, 58, 200, and some other things. Okay. So this is the 21 and 55. The blue being 55, as you should be able to tell, just because it's less than the other one. And the other one's a 21 EMA. Okay? All right, so where'd my drawing tool go? Over here. Okay, so I use these two things in conjunction. And let me repeat this, okay? 161 months ago, right? 13 and a half years ago, when I did this webinar at FX Street. Moderator might have put a space between the, moderator mistyped it. So you'll have to, you can see what the link is, just type it properly. Anyways, 13 and a half years ago, when I first did this webinar, I did the same thing. I think this is actually the same PowerPoint. Like, I swear to you, nothing has changed. Now, you might say, well, why, I like new things, Wayne. No, you don't. Oh, you can't see the chart. Hang on. Gee whiz. Sorry. Let's get back there. Sorry. All right. So, what I was saying is, this is what you want. Okay? You want something that doesn't need fixing, that doesn't need changing. If you are on an email list from some guru and he says, hey man, I got an exciting, amazing, revolutionary new way to make tons of money trading Forex, you should delete the email. Why the heck would you need something new? And the only answer to that is whatever you've been doing is broke. So I haven't changed anything in almost 20 years. So this should be comforting. You should run to this and repel everything else. Okay. So anyways, this is 55. And the other one is the 21. Okay. So this is a combination. A couple of things right away. When the 21 is below the 55, technically speaking, the market is technically bearish. This is not opinion. Okay? We're not talking about analyzing fundamentals and developing an opinion on what the statistics mean. This isn't opinion time. You should already have an opinion, okay, based on fundamentals. You should already have a bias. That's all opinion is. But we're talking about technical analysis here. So I could be, let's say, a bull, and I'd look at this and say, oh, the market is bearish. You understand? It has nothing to do with my trade planning. It has nothing to do with my bias. It's just now the market is technically bearish. So if I'm a bull, I should probably not look for reasons to trade. Why? The market is technically bearish, and I would probably lose or certainly not do as well as I could. Okay? Cool. So I look at this combination and I say the market is bearish. Now what do I mean by market? Sort of the overall general conditions. Were the markets up today or down today? Right? Were the markets up this year or down? It's a general question. In this case, I would, whatever time frame I'm using. So if I'm talking about the year, I might use daily or weekly candles. If I'm talking about today, I might use hourly and 15-minute candles. But that's your market. Whatever the definition of your market is, what's going on in this period, well, the 2155, I look at it and I say, well, technically the market is bearish. You notice how it's not an opinion? Oh, I think it's bearish. Or I'm a bear. This is not the question. What is the market? Oh, it's bearish. Certain. 100% certainty. Okay, now I look at the angle and separation between the two. Okay, when they're diverging, which means when these two moving averages are expanding the distance between them, the market is more and more bearish. It's getting bearisher, otherwise known as your aggressiveness should increase as a bear. You should look for reasons to dump this, and there's no way in hell you're looking to buy it. Okay? Well, by the way, I just looked up at the chat. Lots of people just sending me love. I appreciate that, guys. I'm an only child, and I really appreciate that positive feedback. I love it. Just rain it down out of the sky. You telling me you're making a lot of money because of stuff we're doing together, that's cool. That makes me super happy. So again, congratulations and namaste. All right, so when the opposite is true here, and let's do this in a different color, when the distance between these two moving averages are converging, you are less and less and less bearish, but you are by no means bullish. You are either bearish or less bearish. You're bearish, more bearish, or less bearish, but you're a bear. But market conditions can and do and will change. And so you must adjust your expectations accordingly. Oh, that sounds intelligent. I know, right? So that's the 2155. So get this. You ready? Time to rock your world. When the market is bearish, you should probably look to sell. Now, as simple as that sounds, I know most traders can't do it. For some reason, they're trading against the trend. They're trying to swim upstream. Okay? I know, right? I know it's not you. It's everybody else. But for some reason, it's easier to buy a falling market when you start than sell it. I don't know why. It has to do with patience and discipline, really. Okay? So, I have to figure out when do I sell. So this last chart says, is the market bullish or bearish? That just tells me what to do. I should be a seller, and I cannot be a buyer. Okay? It takes 50% of the potential trades off the table. I cannot buy under any circumstances. Cool. Right on. That's very helpful. It really is, honestly. Learning when not to trade is one of the most important things you can learn. Okay, so this is more like how to trade, or in more specifically, when to trade and when to stop trading. So now I use this different combination of 5 and 8. So the first one, 2155, is market. Guess what this is? Price. So early on, when I was teaching myself how to trade, I realized I need to find congruency. If the market is bearish, and I had to then answer that, how do you know the market is bearish? Then I need to sell. But when do you sell, guys? When the price is right. When price is starting to fall and the market is already bearish, I'm going to be better off selling. I know it sounds simple, but you're probably not doing it right now. Okay? So I'm lining up market forces with price action. And when I find congruency, I tend to do better. Well, then go away, Valoran. Go, I don't know where you can go. But if you're not a lover, you're a hater, and if you're a hater, leave. Just either chill out and relax and be a positive part of the community, or disappear. All right. So market and price. So this 5-8 down indicates to me that price is falling. Remember, we already know the market is bearish, and if you recall, you can see in the previous time frame that the market was already bearish. Okay. So the previous day, let's say this is a day, it might have been a week or something, but we know everything, we know everything to the left was most likely bearish. So you would have woke up in the morning and you were already a bear. So now you were thinking, well, when do I sell? And oh, you get your first little trade here. Okay. Now the interesting thing is when the 5-8 crosses back up, that's actually when you exit, in this case, for profit. Okay. And now you got to remember the 21 is like way up here somewhere, right? So you sold off, you exit, and you wait for it to catch up, and then you try trading back in the trend. Now here's the cool thing, right? Here's the excellent thing, guys. You're selling in a falling market. Okay. Okay. That's all I'm trying to preach. Okay. And that you have to have the patience and discipline to wait for the setups. Okay. Now there's other things like this came into play yesterday. I forget which pair it was, but anyways, that's the fair market value. That's the 200 EMA. That's simply where the bulls and bears agree. So as we know, the market is bearish. Cool. That's why price is below that. Okay. 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 If price was above it, then the market would be technically bullish, right? Now there's more to it than that. There's the extreme levels. When you pull a large distance from the 200 EMA, when things get extremely bearish or extremely bullish, what happens is market participants that are making money, they get nervous about a pullback because the market always pulls back, but they don't want to lose all this profit that they built up by being in the trade earlier and building into it. So when you get extreme distances from the 200 EMA, what happens is people look for reasons to take profit, and often it comes back. Okay, it comes back, and I think in my book I talk about, the farther you pull, the farther you draw on a bow, the more it wants to snap back, right? And kind of think of a price pulling back so far away from the 200 EMA, it's got to find its way back. In this case, we're not in that situation, but that's when it comes into use. This 200 EMA is a target. It's a counter trend target, but it's not an entry. So unlike the 21 where I say sell off the 21, okay, 200 is actually a target, not an entry. Bollinger Bands are a great indicator of volatility, okay? And then there's two oscillators that I use. And the funny thing is, they're only important if you know how to use moving averages. Most people don't even know what MACD and stochastics does. And by say most people that use MACD and or stochastics or RSI or something similar, they don't even know what they do. They've read a book and it said, buy a crossover, sell a cross down, and it's totally incorrect. So I've actually studied these indicators, and very early on back when I was creating my strategies, I looked at what they did and the reasoning behind the sort of the math, but I didn't have a math background. And then I kind of figured out what they were trying to tell me. And then I asked myself, well, what do I want them? What do I want to know from a MACD? What do I want to know about a stochastic? And I changed the the settings, customized the settings so that they gave me the information I was looking for. Right out of the box, I found them completely useless. Okay, so then I find out, well, how do people use them, and then how do I want to use them and customize them? Now, you might know I'm in grad school at Harvard, and 1 or 2 semesters ago, I did a course on statistics, which is basically these indicators, and I actually did the math. So for like regressions and standard deviations and all that kind of stuff. And so I'm very, very intimately knowledgeable about what these algorithms are doing, and it's really cool. So let me tell you how to use them with this background information. Let's see. Okay. These actually have to do with the moving averages. So there's no moving averages up here, but I could actually do the opposite. You can give me this chart. Oops, let's do it this way. You can give me this chart. I can draw your MACD. I just from looking at this chart, I can draw the MACD. And really, I can draw the stochastic oscillator. Okay? How can I do that? Well, because I know what it's telling us, and I know what these settings are, so I can just look at it and calculate it in my head. Okay? Genius? No. Understand? Yes. Okay? So this is really interesting. The reason I change it to 21.55.8 is I'm slowing the MACD down. I slow it down from the standard setup. I slow it down because I'm trying to have it tell me the overbought and oversold conditions for the market in general. Is the market oversold, or is it neutral? Is it likely to resume its trend? So for example, this cross up that you see here doesn't tell me to buy. So a lot of people that take training courses are misled, or that's not what that means. What this cross up means is that the market is oversold. Remember, it was a bearish market, and then the 5-8 cross told us to take profit here, and then a few hours later, because these are hourly candles, a few hours later it said, you know what, this market is oversold, you should stop selling. Quite valuable information. Quite valuable information. Now, stochastics is different. Because remember, I'm trying to line up price action with market forces. Remember the goal here? Identify if the market is bullish or bearish. If it's bearish, I want to sell. So I have market forces, price action. Market forces tell me direction. Price action tells me when. Okay? Market forces tell me like bias. Price action tells me the price in which I want to buy or sell that market, okay? So stochastics, I speed it up because I'm asking stochastics to tell me when to buy and tell me when to sell, okay? Very, very important. You put them together, and that's one chart. Now, the interesting thing is you must look at multiple time frames. If you only look at a 15-minute chart, you're not going to be successful on the long run. If all you look at it as a daily chart, you're not going to be successful on the long run. Okay? What we need to do is a top-down methodology of, daily chart. Now, when I look at a daily chart, it takes me less than 1 second. I just want to know where we are relative to basically the 21. Okay, and I'm done. So I barely look at it because it doesn't change that often. How helpful is it going to be for me? Like, do I want to pull the trigger right here, right now? Well, I don't know. Let's go look at the daily. What do you mean look at the daily? It's something that you look at, and it's just a millisecond. For me, because I have these charts, here's me looking at a daily chart. Okay, I just looked at 3 time frames actually, because I moved my eyes. So I'm like, yeah, I'm a bear. I know I'm a bear. I was a bear yesterday. I'm a bear today. I'll be a bear tomorrow. I'll probably be a bear all week. And the way this is going, probably all month. Like, you don't need the daily chart that much. So I typically, because I already know what it says, because again, how often do you have to look at it? I already know what it says, so I've already made a decision. I know if I'm a bull or a bear, so now I drop into a 4-hour and like, okay, where are we in the cycle for the rest of this week? Really, when I look at a 4-hour, I'm thinking about the rest of the week. I might even be thinking about next week, right? So I start usually with a 4-hour, and I know my bias, and I'm asking, where are we in that cycle? Is today sort of near the end of the cycle? Is it the beginning of the cycle? Is it the middle of the cycle? Right? And that means I have my whole week planned out. Okay. Then I drop into a smaller time frame. I usually skip the hour unless something really interesting is going on in the moment. Got to keep my eye on the clock, right? But typically I drop into a 15-minute chart and I double check where we are in the cycle of, is the market bullish, bearish, or neutral, and is there congruency between the 4-hour and daily time frame and what's going on now in the 15? And if the answer is yes, I just quickly drop into the 5-minute chart, because now I know I want to sell, let's say, and I know the market's bearish, so I got green lights there. I don't need any more information. Okay. And now the next thing is, okay, I'm going to sell, and I only sell high, and I only sell at resistance, right? So like, where's that resistance above me if I'm a bear? I can't sell low. Okay, I can't sell low. I can only sell at resistance. So this is really nice now. On a small time frame, I just have to identify the next 2 levels of resistance. Those are the 2 prices I might sell if I make that decision. And that's now I might be on a 5-minute chart on this this type of setup. And really the only thing I'm looking at is maybe on a 5-minute. If I'm conservative, I might want a 2155 crossover on a 5-minute or even a 1-minute chart. Because remember, I've already made the decision. I got the green light to sell on a daily. I got a green light to sell on a 4-hour. I quickly looked at the 1 and 15, green light. So I don't need any more information. I can even drop down into this 1-minute chart and say, next 5A cross down, or the next 2155 cross down, depending on how conservative or aggressive I am, and I'm done. And remember, I know what the price is. It's resistance. Well, how do you figure out resistance? Well, that should be like one of the easiest things ever, right? Psychological levels, pivot points, price action, what I call role reversals and stuff like that. That should be an easy part of your technical analysis. Now, let me say something here. If you struggle with finding support and resistance, then stop everything that you're doing right now. Don't worry about learning this trick or this methodology or that methodology, right? You have to know price action. If you don't know how to find support and resistance, you will fail at every strategy there is. Okay? So learn price action. Okay? In fact, I'll show you. I use 2 leading indicators primarily. Let me clear this out. Let me give you clean charts. Here's the 2 things I absolutely need to trade. Okay? And I don't even need those candles, really. So I'm going to switch this to that. Okay? All right. Those are 2 leading indicators. This is all I need to trade on my charts. Okay, the red and green and the gray lines, all the horizontal lines and stuff, they're pivot points. One happens to be monthly, the other one happens to be weekly, but it doesn't matter that much. It doesn't matter, just all pivot points. You can have annual pivot points, you could have daily pivot points, you could have 4-hour pivot points. I don't really care. What matters is I'm looking at next week. Okay, they're leading indicators. They tell me on Monday what the target is. Okay? Okay? I run a swing trading group, and we do this on Thursdays. You know what we do on Thursday? We talk about Monday and Tuesday's trades. I swear to you, we meet on Thursdays to talk about what's going to happen on Monday. Things like, this is a buy zone, this is the target, right? This is a buy zone. This is a target, right? This is a buy zone. Remember, it's Thursdays. This is the target. This is a sell zone. This is the target. Nice. They're leading indicators. I don't dwell on the past. Someone up there said, yeah, well, anyone's great in hindsight. Dude, grow up, okay? We're talking days in advance. Days, sometimes weeks in advance, okay? Great. But it's not smoke and mirrors. It's not a trick. It's just analysis, okay? Cool. Now, so that's the one thing. I like pivot points. I cannot trade without pivot points. I wouldn't want to because they're leading indicators. They're telling me targets, right? Target, 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 target. Cool. Now, the other thing is even more subtle than that. It's price action, and it's just the price. So what do I mean by price action? That's it. If you can't trade this, you can't trade. Oh, but I have a magic indicator that, oh, dude, come on. If you can't trade this, you can't trade. That's all you really need, but then other things are helpful, right? So identifying support and resistance is a critical skill to have, okay? Critical. And if you don't understand this, this is where you should spend your time until you get it. Okay? Okay? I'm not trying to smack you. I'm trying to get you focused. Okay? You got to know price action. And the reason behind it is you need to identify support and resistance. Okay? And I'm not even talking about like channels and let's create all this other stuff. And no, just support, resistance, support, resistance, support, resistance, support, and resistance. And then you add a couple other tools, and it gets easier. You have other indicators, so you don't need this, for example, but you could use it if you wanted. Okay. And this is my standard setting now. Okay. So I have monthly, weekly. I use the moving averages a bit. I don't even use the oscillators that much because we're setting up strategies, right? The odds of me being with you at the exact rollover for a proper entry is like 0. But anyways. All right. Cool. All right. High volatility, event-driven strategy. All right, so we're going to move into scalping now. Okay? Going to move into scalping. Take your swing trading hats off now. Scalping. Okay, put that on. Scalping. High volatility, event-driven strategy. Okay? Luca, I've already said I'm neutral on the news. I don't think it's going to be good. I don't think it's going to be bad. I think the big news today is the Jerome Powell speech because it's his last opportunity to speak before the blackout period. And if he tells us that we've mispriced the market, it's going to move. Nobody's mispriced non-farm payrolls. Now, here's the really interesting part of today, okay? Besides that, here's the most interesting thing about non-farm payrolls today, okay? Let's say it's dramatically different from expectations. What's the number today? $1.60? Let's say it comes out 320 or it comes out 75. Like crazy ridiculous number. Is good news good? Or is bad news good? Is bad news good? Or is bad news bad? So here's the problem here. Let's say it comes out amazingly good. That means the Fed can't cut interest rates further. Well, that would be very bad for emerging markets. But I don't know, like all of a sudden you're like, that forces the Fed, they can't cut, they shouldn't cut if we have a booming market. By the way, we're already at full employment. So if it comes up 320, you're like, we just don't need the stimulus. It's supposed to offset the trade war, but dude, right? But if it comes out horrible, then they have to cut. Maybe that almost certainly would confirm 3 cuts are necessary, but that's already priced in. And if it comes out neutral, nobody knows anything. So you probably get a big move one way, a big move the other way, and by Monday morning, we're right back at the same price. So here's what I do to handle this. Okay? Whatever happens today isn't likely to fundamentally change anything. If the Fed's going to cut 3, they're going to cut 3. Really, most likely, unless the news is just shocking beyond belief. But even then, people are going to say, that's just, I don't know, a one-off, and it's going to be completely corrected or something, right? Or they'll blame Trump. And if they don't blame Trump, they'll blame Obama, which is cool. All right. So anyways, they'll blame something, but we'll just say, oh, that was bad numbers. We'll really wait to see October, right? So whatever, I think ultimately the Fed's going to do what the Fed's going to do. And the NFP is really probably, let's say 95% chance, it's not really going to be much meaningful one way or the other. It's not likely to influence the Fed one way or the other. But if it's interpreted like it might change Fed policy, or more likely, Powell says something that's interpreted as mispriced, then the market's going to move, okay? So the actual number is actually irrelevant because we're trending. We're at full employment. Look, we're not going to get negative 200. We're at full employment, right? I mean, and it's not likely to be a big number because everyone with that wants a job has a job. Okay? I think there's twice as many jobs as there are people looking for jobs. Isn't that amazing? So the only way to get someone to work for you is to get someone to quit their current job and come work for you. And to do that, you're going to have to give them more money, more benefits, a better job, a higher, more interesting job. Okay, I better keep my eyes on this. Okay, so anyways, let's go into the scalp. Okay, so the numbers come out. It comes out, blah. It comes out $1.85. Okay, great. So the market either moves up or moves down. I don't really care which way. I'm not going to guess, so why would I care? And like I said, it's really hard to guess now because a good number might be bad, but a good number might be good, depending on how the market's situated and how the market interprets it and all this kind of stuff. And let me tell you, right now, the market isn't that smart. The market really doesn't even get it, in my opinion. So their interpretation is likely to be short-lived. So I would be careful. So in a high volatility event-driven strategy, I'm not guessing, so I don't even really care which direction it goes, because on the long run, it's going to go in the direction of the trend, and I've already made my bias, so I already know what my opinion is. So my opinion is by Monday or Tuesday, we're going back in that direction anyways. So what this might give you is a quick 30 or 40 pips. Whatever. Great. You made great 30 pips. Good. Buy your yellow Lamborghini and we'll move on, right? So the market will come out. The market will likely move. It's not going to move 300 pips. It's going to move 30 pips. And it'll either do that or up or down. Cool. Well, above us, there's going to be resistance, and below us is going to be support. And we're going to have some directional move. Good. We know all these things, so we'll incorporate that into our plan. So we'll drop into a 1-minute chart. The news will come out. NFP will be whatever. And in this case, this is an example of the market over the course of the first 2 or 3 minutes say, hey, man, the news is up. The news is good if you interpret up as good. Cool, right on. So that tells me, since this is an event-driven strategy, high volatility event-driven strategy, I'm going to trade in the direction of the price. And in this case, the price wants to go up. So as a bull now, I can only buy low. If you understand that, say I. If you're a bull, you can only buy low. If you don't get a red candle and you're a bull, you can't trade. If that makes sense, say I. Now, once that happens, once I get a red candle, I say, cool, I now have potential to buy. Remember, these are 1 minute charts. These are scalps. So ideally, I want to buy somewhere between the 382 and 618 Fibonacci. Somewhere between the 382 and 618 Fibonacci is my sweet spot, and I'd like to buy in somewhere in there. By the way, I also typically look at roll reversals. Okay? It kind of goes without saying, but I kind of look in here first. Okay? But I also look at this, and it's my sweet spot. And then I look at them, and really salivating at buying right here. Okay? That's what I want to do. But I have to use technical analysis to confirm or deny that I get what I want. And in this case, hey, we didn't get a perfect entry. Too bad, so sad. Okay? But it held for a minute, then it held for another minute, then it held for another minute. It held, dude, you don't need a group hug or a committee meeting. It held for 1 or 2 or 3 minutes. Buy it. It's a scalp. It's not a long-term decision. You're not getting married. So you buy somewhere in there and you put your stop just below the lowest low, and you're risking 18 pips. Good. If you lose more than 25 pips on this trade today, you have no idea what you're doing, and you're not following the rules, and I don't really care in that case. Because I can't help someone that can't follow rules, right? So in this case, you put your stop just below that. You buy ideally somewhere in here. It could go a little lower, but after 2 or 3 minutes of it holding, dude, it's a scalp. Get in. Drop a stop, pop, right? Drop a lot, pop a stop, take a walk. Okay? And it's just a scalp. Okay, cool. Now, check this out. After 1, 2, 3, 4, 5, after a few minutes, after 10, 12 minutes, your trade should be profitable. If you're not profitable, you're going to lose your money. Don't worry about it. You're going to lose your 18 pips. I mean, you could even just get out with your -9 and call it a day. But in this case, typically, if you get it right, you know, let's say you're long somewhere in here and you survive this, and now you got a couple of green candles, okay? Move your stop to break even. And now you're going to get paid on a breakout. If it breaks out, you get paid. And if you get paid, you get paid. Okay? Now, remember this? Resistance. There was a reason, even after the big news, that price was rejected. That's why you want to get your stop to break even before you test it, because if it doesn't break, what's it going to do? Reverse. And you get knocked out of break even at this point. Okay? So you should be hero or zero before you get to this line in the sand. Okay? And that's it. In this case, boom, you got paid. Okay. All right, hang on. I got to check something. Hang on. I got to move. Oh, I got to move. So let's kill that. Save, I guess. All right. Yes, I guess. All right, hang on. I think my trade the news expired. I gotta move. So while you do this, download my chart templates, visit tradersway.com, subscribe to the FX Street YouTube channel.
$24 a day at support@trade. Now from the Trade the News Broadcast Network. If you are hearing this message, your sound card and network configurations are working properly, and you are now ready to listen to our other voice channel.
Cool. So we're ready.
Just a reminder here as we head into this employment number, typically seasonality and technical factors historically have created the scenario where the August payroll report is understated and in prior gets revised higher, so most of the whisper numbers appear to be to the downside. In terms of the payrolls number, non-farm payrolls expected at 160,000, but many of the whisper numbers slightly below that in the 130 range due to historic seasonality.
Use a demo. So a bear would have sold this yesterday, by the way. So there's more opportunity for bulls if this turns bullish. Okay. Oops, delete. What bulls want is this. But bears have already set up their trades as this. So you're already way late. You're like 24 hours late if you're a bear. And bulls are salivating. They totally want to get long. So it comes down to the interpretation of the numbers.
You're listening to Trade the News.
Watch the Canadian side too. Watch CAD.
In 30 seconds of the non-farm payrolls figures, looking for 160,000 in non-farm payrolls. Unemployment rate expected to hold at 3.7%. Average hourly earnings expected up 3% year over year versus 3.2 previously. And we are looking for one tenth uptick in the weekly hours to 3.4%, 34.4 from 34.3. We'll get you the revisions in the Canadian figures as soon as possible. 130,000 below the 160 expectation. 3.7% is in line. 34.4, 1/10 uptick in average hourly earnings as expected. 3.2% in average hourly earnings above.
Oh man, Canada's hot. Look at Canada.
Month over month. Back month revised slightly higher to 3.3% for average hourly earnings. Back month payrolls revised slightly lower to 159 from 164. Average full-time employment change in Canada, 23.8 above the 17.5 thousand, with a rate of 3.8% below, wage rate of 3.8% below the 4.5% expectation. Canada unemployment rate at 5.7% in line with expectations. The U6 for the U.S., the underemployment rate rising to 7.2% from 7%, so a jump there in the U6.
Tons of resistance at 20 pips above us.
And average hour earnings coming in strong at 3.2% above the 3% expected in the back month revised higher.
So you got your
Salary
618.
a little lower here on the data, 106.85. Didn't touch it a moment ago. Canadian dollar firmer there on that big beat there on the headline. Net employment rising
Big hot number there.
above the 20,000 expected.
So let's roll over to that. Let's go back to my news setup. Just sick. Oops.
Just know for the U.S. employment, the birth debt was plus 93,000 compared to a pro rise of 198,000.
Cool. Very nice. Okay. The funny thing is, the trade plan for bears is to sell in there. But it's next week's trade plan, though. And next week's low is around 131 to 130. So that's why we do
Again,
this.
the initial headline in markets appears to be optimistic in the non-farm payroll, slightly lower in equity markets. Interest rates also moving slightly lower, but again, just marginal movements here on the employment figures. Again, the 130 print was below consensus, but in line with many of the whisper numbers.
Beautiful.
The wage data coming in slightly better than expected.
So that's the trade plan on this that we did yesterday. Thursday at 11 in the morning. That's our trade plan for next week. Very cool. Oops. Very cool. Beautiful break of the channels. Very clearly change of direction. Okay. Got to identify these levels. Right? Very cool. There's going to be a challenge here because here's the problem. Although September is typically a breakout month, typically this is the target for the month. Let me draw this. Typically this is the target for the month, like so the month of September. But remember, August was tight. It's called an inside month. So in this case, you use S3 or R3, above and below the typical pivot profit zone. And you expect on these months breakouts. Okay? Because August is a low vol month and September is a high vol month. Okay? So the pivots are going to be too tight. Okay, this was the low, projected low for the week. This little spot right here. Cool. So this one's going to be even harder to catch than usual because it was such a hot number. So remember, our sweet spot is somewhere between the 382 and 618 Fibonacci, right? Trying to get that wick properly. Okay, it's a 1 minute chart. Okay, very nice.
The dollar index holding right around the unchanged mark. We've seen it give a little ground into and through the jobs data. 98.42 in the dollar index.
Okay, that one's Oscar Mike. Let's take a look at some of the yens. Let's do yens. I want to get like a macro view of how the world interpreted the results. And not a lot of impact. Still doing what it's been doing. We're at a lot of psych levels here, 81, 73, 18, right, 118. A lot of psych levels. There's some vulnerability there. Okay. Okay. Generally positive, though. I like dollar weakness. I like yen weakness. It's I'm going to take a look at how exotics have looked at it. Positive on Peso, positive on Rand, and nothing major here on, no real response on Lira. You guys remember this one? We sold this in May.
Russian Central Bank of Malaysia saying that their inflation estimates differ due to the pace of consumer lending growth.
Now the interesting thing is like 300% on this trade.
The outlook and a speech in Switzerland. It's also worth noting there will be a Q&A portion with the moderator. You could see some market moving comments at 12:30 Eastern time.
That's the big news of the day, guys. So thank you to TradeTheNews.com.
Overall, interest rate expectations really don't appear to have moved all that much on the jobs report. Still seeing.
So what I was saying here, in the 100 days ago, roughly, I don't know how many days, but May, is earned over 300%, but just in the interest it collected. If you include pips, I'm up something like 2,000%. So I invested $100. I'm up $1,250 in pips, but almost, well, $370, so 370% plus 1,250%. Okay, isn't that neat? And then these are last week's swing trades. I'm up 200 on the Aussie yen, and I'm up 180 pips on the CAD yen. Cool. But imagine the interest is amazing, right? But those are just swing trades. Does anyone want to join the swing trading group? We meet once a week. You set up trades 100 to 300 pips each. You're welcome to join us. Let's see. Let's go back to this setup. Yeah, Leonard, I'm actually going to relaunch it probably in the next week or two, completely different. Okay. So if you're going to join my swing trading group, it's swing.fxbootcamp.com. It's not a lot of money to join. It's like $1,500 cheaper than last year. I mean, the money isn't a big deal. There's a small monthly fee. It's not a big deal. So you're in or you're out kind of thing. Cool. So just looking at the world here, looking at the reactions, everything is still sort of right on trend. Yeah, Leonard, so some people, most people didn't have any problems, but some people did. So I'm just redesigning it. So my apologies for that. I really hope for it to work for you. Okay? Up, 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 down, down, up, up, up. So now we're thinking bears here. What would a bear do? Well, a bear's going to look at this as resistance. Okay? That's what a bear is going to want. Swing.fxbootcamp.com. Yeah, we'll do gold. Yeah, sure, unethical, for sure. Oh, for sure. So I want to state something here. This is resistance. Bears are going to look for excuses. Now, I think bears need double tops before they take a drop. Why? Well, the market is technically bullish. Remember that whole speech I gave to you an hour ago? You don't really want to be a bear in a bullish market. So we need to like squeeze these moving averages together. So, you know, it can come down, but most likely it's going to try to go up again. And then a double top would be the big aha moment for a bear. And they're going to think, oops, they're going to think, aha, okay? But we need that really before you start selling. Otherwise, this is just a counter trend trade, and I don't counter trend trade on Friday, right? Which squawk did I use? It's called tradethenews.com, and I've had a site license with them since 2006. It was actually cool. I was at the, I think it was the FXCM Trading Expo in New York City. That was an interesting one for many, many reasons. But one of them was it was the first conference that FX Street came to the United States to visit. You know what I mean? It was really cool. So I got to meet the FX Street people in person. And then I was kind of cruising around the trade show floor, and I bumped into Trade the News. So whatever year that was, 2006 maybe? Yeah, so someone said an analyst have been trying to get the indicators. You know, yeah, it was interesting. Like, most people don't have a problem, but every once in a while I get an email and they're like, can you help me install the indicators I just downloaded? I'm like, dude, there's a giant video right in front of you about how to install them. But so it must be that some people, the video doesn't load or something. So anyways, I'm like, you know, instead of trying to fix things, I'm going to rebuild things. So anyways. Okay. So anyways, let's do gold here. Let's do gold. I got a request for gold. Gold. Sure, let's do some gold. Okay, cool. Well, we know where the resistance is, right? So there's that. I think these are day trades. You know, I need to update this. So let's get off day trading here. And let's set this to weekly. Okay. All right, so that's actually a perfect setup. So if you're a bear, let me get my drawing tool. Okay, let's delete that. Delete. All right. So if you're a bear, you want to look left, of course, right? It's all about looking left. Okay. And so looking left, if you're a bear on gold, okay, then what you're looking at is this. Okay. Notice all of that over there is going to be a real challenge. But that's that. Now, if you're a bull, I would probably take a break. It's not really amazing, and it's almost bad market conditions currently for you to be trading. But if you were going to be a bull, you would kind of have to wait for this pullback anyways, and then you need to wait for the drop anyways, and then maybe you get a move like this. That's a lot of waiting. So you probably won't get a trade till Wednesday or Thursday. Ken Yu says, the link, please. What link? Yeah, Alan, right? And I've known you a long time, Alan. So it's strange, right? It's amazing. So you see the giant page where it says click here to download, and above it there's a giant video. And I think it's even hosted on YouTube. So it's like YouTube's gonna work, right? And so like, why is the video not there for some people? It's really strange. So I'm just gonna tear down the whole thing and rebuild it. So anyways. Not on this platform, but Eurozar has been a fantastic currency to trade for several months. And then it took a month or two off, like, what was it? Basically August. It took the month of August off. And then September, boom, time to sell it again. So, yeah, it's a good trade. As far as still short, you know, it's not a question of still short. It used to do this. Like, I remember, when was it? Like June and July, I think it was June. It would drop during the day. It would fade in Asia, sell. It would drop during the day. It'd fade during Asia, sell. It'd drop during the day. It'd fade during Asia, sell. And it just did this like day after day after day after day after day after day. It was, and then all of a sudden it did this. Whoa, whoa, whoa. And Rand took a bloodbath for a bit, but it was pretty interesting. It was, it's been a good pair this year. Okay. Any questions on gold? Gold going up must indicate dollar weakness. And of course, look at where we are. I would just consider this really still range bound as it tries to figure things out. Okay? So if I were me, I would still really just psychologically still have this trapped. It's trying to figure out what it wants to do between now and the rest of the year. So think of it that way. Now, things are different now. Things are different now than they were, let's say, back here. And what's changed is that we have gone from the summer into the fall. We've gone from low volume to high volume, from a thin market to a full market. So this more current move has, let's say, has more importance than this previous consolidation. Okay, so now this may certainly do this next week. Okay, for that we need continued dollar weakness. For that we need to have Powell tell us, yes, we are going to cut rates 3 more times, let's say. But here's the problem. So that should lower the dollar. But if the rest of the world sees that and says, well, we can pick up 1.5 in the 10-year T-note today, but if the Fed cuts interest rates, this may drop below 1.0. So you might as well lock in today's prices now. So, the Bank of Malaysia decides to buy a bunch of 10-year T-notes while they can, and they drive up the value of the dollar, even though the Fed's cutting. And that's really what's happening. Okay? La la la, la 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 la. Okay? So that's next week and really next month's trade, right? So now I would redo this and go to a different template. Okay? And I'd have to line up really the weekly and the monthly. So if I were a bear now, okay? If I were a bear and I were to marry, okay? My bearish trade plan 2 weeks ago. You understand? Like not today, not yesterday, 2 weeks ago. We had a plan set up on this, okay? So now the follow-up plan, if you're on the first plan, this is what's going to happen next week, okay? And then the week next is going to do this. And by the end of the month, we're going to be down here. So we're looking at 1,400 on gold if you're a bear. It's perfectly set up if you're a bear. Now, if you're a bull, bulls are going to start waking up very soon. And I already highlighted this for you. This is where bulls are going to get serious now. So that's why I trap it, because either way, if we're on our way to, let's say above 1,600, or if we're on our way down to 1,400, there's still room to be patient if you haven't made the decision. So again, if you made the decision several weeks ago, you already took a shot off of here. Why? Well, you couldn't buy it up there. And we knew a move was coming based on seasonality. You don't know if it's up or down. I mean, you might have a fundamental bias and all that kind of stuff. But let's just say technical analysis wise. The thing we know for sure in this area is you can't buy it. And the other thing is some big move is coming, right? You're standing on the beach, staring out at an empty ocean, and you say, you know what? There might be a tsunami coming. I don't see it, but I should probably start running, okay? It's kind of this where you're like, there's a big move coming. I know for sure, I just don't know what direction, but I can't buy it here, so I could take a shot in anticipation of the bigger move coming. Okay, cool. So in this case, it's down because you can't buy, so you try selling. Okay, and now there's a potential for a follow-up here next week. Okay, the worst case scenario now, if you try selling next week and it doesn't work, is that it's because we're still stuck in the range. Okay, I think that's unlikely. It's not stuck in the range. The bulls win, and you lose a little bit of money in here. But the upside is it reconfirms itself on the pullback. Because if it breaks out to the upside, it's going to do this, and you end up buying right there, guys. Or it breaks out and comes back, and you sell right there. You could wait. You understand that? You could be selling it here, not today, not next week, probably the week after. Or you could end up buying it here at 150, at 15.5, right? But not today, not tomorrow, not Tuesday, not Wednesday, maybe Thursday if it's an early breakup, but not likely. Maybe Friday, I doubt it. But maybe Monday or Tuesday of the week after next week. The week after next week. Where's the guy that says I'm all hindsight? Dude, you're embarrassing yourself. I don't talk about yesterday. I rarely talk about today. If you don't know what you're doing today, you have a losing strategy. So we always talk about tomorrow, next week, later in the week. If it hits this on Tuesday, then it'll do that. But if it hits that same thing on Thursday, it'll do something else. We're talking days in advance setting up trades. And what do? We buy at support and we sell at resistance. So if you go back into the thing where I say if you can't identify support and resistance, you're not going to be successful. That's why you need to go back. It's all about support. So if I say to you, are you a bull or a bear? And you're like, Wayne, I'm a bull. Cool. Tell me where the next level of support is. Oh, I don't know where that is. Then your bias is irrelevant. You understand? Because the next question will always be, oh, so you're bear? All right, give me the two different prices that you'd be willing or that you'd consider selling at. You're like, well, how would I know that, Wayne? Like, oh, well, the next two levels of resistance. Because you only sell at resistance as a bear, so that sort of begs the question, where's the next level of resistance? Oh, I don't know where that would be. I have no idea. I'm not really good at that. Well, then you need to stop everything and get really, really, really good at identifying support and resistance, right? Okay. Capiche? La 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 la. La 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 la. Question about Lira. The only reason I guess we need to do that. Kind of did this yesterday, but let's go back. All right. So here's something. Do you want to get beautiful people to like you? You're at a cocktail party. You're holding a fancy drink in your hand, and a beautiful person comes up to you and says, hey, what do? You say, I'm an international financier, and I lend sovereign nations money. And they're like, what? And you say, well, I'll give you an example. Turkey is short on euro. They've taken out all kinds of loans. They've borrowed all kinds of money from Europe. And on a periodic basis, they have to pay it back in euro. The problem is they don't have any euro. So I'm like a pawn shop for Turkey. I will lend them euro, but I charge them ridiculous fees. And all of a sudden, people are looking at you like, what? So yeah, I lend Turkey euros. So I go to Europe and I say, hey, European Central Bank, I want to borrow a bunch of euro. what are you going to charge me? And they're like, it's free. I'm like, what? How much is a loan? If you loan me some euros, how much is it? Oh, it's free. You're shitting me, really? How much can I borrow? As much as you want. Really? Huh. Well, that's a pretty good deal. So, you borrow as much euros as you possibly can, and because of the kind heart that you have, you lend it to the good people of Turkey. And you're like, here you go, Turkey. Here you go. But here's the trick. Not only did you borrow a lot of euro from the European Central Bank, you're leveraged 100 to 1. So they're like, we need some collateral if we're going to lend you some euro. We're not going to charge you any money for the euro, but we'll need some good faith collateral to make sure you pay us the loan back. I'm like, that's cool. So they're like, for every $100 or $100 worth of euro that we lend you, you're going to have to put up $1 in good faith money. And it's just going to sit in an account. And it's just going to be there. Oh, that sounds really nice. $1, you'll give me 100. I put in $2, you give me 200. I put in $1 million, you give me 100 million. Oh, okay, let's play that game as long as you possibly can. So anyway, so you set all that up, you put up some good faith money, and you borrow euro, and then you go to Turkey and you're like, hey, because of my kind heart and my natural beauty inside, I'm going to lend you this money. Okay, Turkey? And Turkey's like, oh, thank God, we need this. Allah be praised. We need this money, right? So you say, all right, I'm going to make you a deal, Turkey. I'm going to lend you the money, but I'm going to charge you 1,780%. And they're like, what? Because you're leveraged 100 to 1. Okay, yeah, Turkey, I'm going to lend you euro that I got for free. And I'm going to charge you 1,780% a year. And they're like, okay. And then you ask the same follow-up question. How much would you like? And Turkey says, as many as you possibly are willing to lend me. And you're like, well, I'm in such a good mood today, Turkey. If you're willing to pay me 1,780% on something I get for free, I will give you unlimited amounts of euro. This is how you trade. Now, I'll go back to that example. So I lent euro to Turkey May 9th. So let's say it's not quite all of May, but it's not quite September, right? So all of May, all of June, all of July, all of August, 4 months. So it's been 120 days or something, right? Okay. Right? 120 days. Okay. So let's do this per year now. So there's some fees involved and stuff like that. But anyways, calculator 2. All right. So I've been in for 4 months, let's say. So for a year, I have to multiply this number by 3. So let's do it this way. 368 times 3. I can't even do this. Well, I know what the number is, 1,100, right? 368 times 3, because that's 4 months times 3 is 12 months, 1,100, right? So $1,100. So there's some fees and stuff involved and such, and the spread. Anyway, so after all is said and done, okay, after all is said and done, I will collect $1,100 in interest from Turkey. Cool. That's really cool. On $100 that I've ponied up of my money. You guys see that, guys? I'm only talking about the swap. $1,100 in my bank account per year on $100 cash that I have invested on this trade. Because that's per mini lot per year. 1,011 in swap only. Holy moly. Holy moly. Holy moly. Holy moly. More than 1,000%. My stop's at break even, guys. Look at this. Check this out. I have to zoom in. So this is where I traded it. My stop's at break even. I can't lose any money. I basically, think of it as a bond now, okay? Think of it as a bond. I lent Turkey euros, so it's a euro bond, okay? Turkey says, we issue this bond, we'll borrow money from you, we'll borrow 100, right? But I'm leveraged and all that kind of stuff. The key is leverage, right? So anyways, we issue this bond, and we will pay you $1,100 a year. Cool. Now, that's a bond, right? Now, here's the interesting thing. I'm already up 1,200% in pips. Plus, I'm guaranteed if I stay in for a year, the same amount, basically. Okay? Isn't that neat? What if I'm in this for 5 years? What if I never take profit on this? What if this is an all-time high? What if things just slowly normalize in Turkey? In 2010, we were down here. 2011, so it's been on a long, slow, slippery slope, and then we had that big move. But is there any chance? Well, I shouldn't say any chance. Is there any reasonable chance? And if I can find my drawing tool, I would write, oh, it's way over here. Okay. Is there any reasonable chance the worst is over with the Turkish crisis? And that selling here just sort of did this for 8, 9, 10 years. Is there any chance that this slowly does this? These are weekly candles, guys. Is it plausible I can be in for 3, 4, 5 years, 8 years, 10 years? Is it plausible that that's an all-time high? Look at something. Let me give you an extra click now. Come on, drawing tool. Let's see if it'll let me do this. Look what I did. You ready? Wait for it. Wait for it. I sold a 618 Fibonacci retracement. Yeah. So 618 predicts a 1382. Okay. I'm only halfway home. Bare minimum. How long is that going to take? These are weekly candles. This may take, so let's do this. Let's kind of measure the distance between where we are now and where we want to be. It's not quite there. Is that about right? Well, I guess we don't know this part. But let's say, let's kind of do it this way. So if this was August, another 7 months. So it looks like I could be in this for the year, collect my 1,100% minimum, right? Just to get down there. So I'll have 1,100% interest, but I'll probably be up 2,500% in pips, plus the 1,100. So I'll be up 3,500%, let's say, return on investment. Isn't that neat? Yeah, Trader's Way has amazingly awesome swaps. I'm quite confident you can go to your, if you have a pathetic broker, you can check your swaps and Trader's Way just blows the doors off. You're probably playing negative swaps on both sides, where Trader's Way is paying you 1,100% a year. Okay, amazing. Trader's Way is amazing swaps. So anyways, cool stuff, right? Did anyone have an aha moment? Did anyone just say, I want to be an international financier lending money to sovereign nations? Right? Doesn't that sound good? And you're like, pretty people are going to be attracted to you. So they say, I like you. You crazy. Yeah. You get a little bit taller when you're an international financier. A little bit taller, a little bit prettier. Yeah. So anyways, we'll see if this will just keep cruising along, doing its thing. Okay. Now, there's also this idea that every day it makes me money, and I don't do anything. So if every day you scalp, or every day you spot trade and you take 25 pips out of the market and you close your trade, think of it this way, guys. You rebuild your business every day. You're like a pop-up restaurant. You build your restaurant all morning. Takes lots of time, lots of money. You got to get a lot of people involved. It's a real headache. And then you got to create your menu and send someone out and buy all the ingredients. And you put all this together and you're like, oh man, it's noon. We're going to open for dinner in a few, in 5 or 6 hours, but we have no marketing. So now you start printing some advertising and you send out some emails or posters or flyers or something, and you send someone else to get on the radio and talk about it, and you Facebook it like crazy. You're like, hey, we got this pop-up restaurant. It's going to open today. And then finally, maybe people show up, maybe they don't, but they come in. Maybe you make money today, maybe you don't. And then once it's all over, you shut your restaurant down and you have no reputation. No one comes back tomorrow because you're not even going to be in that location tomorrow. And you don't have a menu, and you don't have any employees, you don't have a chef, you don't have any, you have to do it all every day. You have to do it over and over and over again versus just opening a restaurant, hiring constant staff, having a regular menu, and then building up a reputation so that people fight their way in to get in your Look at Food restaurant, right? Oh, have you been to Look at Food? It's fantastic, right? And people line up outside your door. Is your trading similar to that, where every day you start from scratch? That means you work per hour. You sit down at your charts and you say something like, okay, what is going to happen in New York? Should I buy this or should I sell this? And you're in it for 2-3 hours. You make 30 pips, you lose 30 pips, and then you go home. And tomorrow you start fresh. Okay? That means you work per hour. And I don't care if you make $1,000 an hour or $1 an hour, you're poor. Poor people trade their time or their muscles for money. There's no value in it at all. Okay? Not to the person anyways. Okay? Now, if you invest your capital, okay, you buy a trade, you invest into a trade, whatever it is, okay, and now, so like this one, I have my stop at break-in, I cannot lose money. I cannot lose money unless there's a massive black swan event, and the likelihood of that is near zero. That's why it's black swan, okay? And you can see that there might be a continuation here, okay, whatever. But the thing is, every single day I get paid. Every day I get paid 1/365th of 1,100% per year. So if I had $1 million on here, right, they're going to pay me, right? If I had $1 million of my cash, now I've borrowed $100 million worth of euro, and I've lent it to Turkey at 1,000%, your million in cash will turn into $1 billion. Like, at some point, this is a real wake-up call, guys. But the nice thing is, every day I get paid. And I get paid, whether it's 89 cents or $80, right? Or $800 a day or $8,000 a day. It's the same thing. I sold it. I moved my stop at break even. I get paid every day. I don't wake up in the morning for it. I don't have to exercise for it. I'm not exchanging my time. Now, if I use my brain properly, I catch something that on top of the interest payment also appreciates in value. So let's give a different example to make sure everyone's on the clue train here. Okay, I have some money and I go to a bank and I say, hey bank, if I deposited this money, how much money would you give me? It's not quite how it works, but it's similar to brokers. We can reverse engineer this. It's the same thing, but from a different point of view. All right? It's all relative if you talk to Einstein, right? It's the same thing, it's just your point of view. All right. I find a $20 million apartment building with 200 keys. 200 keys. 200 people paying me rent. Cool. And I got a good deal on it. It's not an amazing deal. It's not about the price, but the price is good. Certainly within the required numbers. Okay? Good. So you go to the bank, you're like, hey, I got this asset here. It's an apartment building with 200 doors on it. I'm collecting rent from 200 people. Cool. I want to buy it for $20 million. How much do I need? And they're like, you put down 30% and we'll give you the rest. We'll be a partner with you. We'll finance this with you. Now, we're a first in, first out partner, which means every single month you pay us, F you, we don't care. There's a disaster, F you, we don't care. All my renters left me, F you, we don't care. There's termites and F you, we don't care. Not our problem, we get paid first. But after all those, after you pay us, whatever happens, it's yours. We don't give a crap. You just pay us for the money we put in. And they're silent partners. Cool. I like that, actually. I'll take that all day, every day. So you put up 30%, they put up 70%. Now you got 200 doors. Cool. Now, every single month, all doors, all apartment renters pay you money. It's called rent. From the rent, you pay all your expenses, right? You have to have insurance and maybe the roof leaks. You got to have a management firm, so they collect the rents and they fix the leaky toilets and they do all that kind of stuff. You have to pay some landscapers to mow things, whatever. But the thing is, you don't do the landscaping, you don't clean the toilets. You understand? You pay someone, you pay a poor person that's willing to clean the toilet if you give them some money. It's their time. They'll do it for time. They'll fix the roof for time. They'll mow the lawn for time. You just pay them for your time, for their time. And that's cool because there you go. But you don't work for time, okay? Okay. So anyways, you own this building. So you pay everyone to do all the work for you so you can spend all your day at the country club, okay? Everyone else does all the work. And then at the end, you have your cost of financing because the bank is like, you got to pay us. You got to pay us. We want our principal back plus some interest. So every month you owe us this amount of money. So you got your net operating income, that's all your rent minus all your expenses, that's your NOI. Now you got to pay the bank. So now you pay the bank with what's left over. And let's say if there's any cash left, that goes in your pocket. If there's no cash, well, at least the bank's getting paid and the mortgage is going down. But usually you put money in your pocket. At first, it's not a lot, but it's enough. Now, on a $20 million property, it's probably a few money, but whatever. So you're doing really well. Let's say every month you put 10 grand in your pocket, but you own the building and you do nothing, right? You sleep in tomorrow, you get paid. You wake up and go golfing, you get paid. You go on vacation for 3 weeks, you get paid. Someone else mows the lawn, someone else cleans the toilet. The thing's insured. If the building burns down, the insurance company pays for it. And that money you collect It's just paying you for the money you put into the bank to say, here's my 30%. It's just compensating you for your money. You're not getting paid for your effort, your time, or your knowledge. You're just getting paid because you own something. Okay? And now after 10 years of making $10,000 a month, doing nothing, you're like, I'm really bored with this thing. And the market seems, prices are really high. Someone's offering me a really good price. They're offering me $25 million for this building. You're like, yeah, I think I'd like that $5 million. So you're like, okay, boom. Pay off the mortgage, transfer a piece of paper to the new buyer, and now you have $5 million in cash. Because the value of the apartment building went from 20 to 25. Did you work for it? No. Did you clean the windows yourself? No. Did you fertilize the lawn? No. What did you do? Nothing. That makes you wealthy. Okay? Now check this out. It works the same in Forex. I put in some money into an account. I put in $1. Traders Way, they're like, we're in it for 100. Love it. What a great partner. So it's better leverage than real estate. Now, I collect rent every day. Every day money gets put into my pocket. In my account, paid. Not floating profit and loss that I can't touch. If you're in a stock, by the way, and your stock goes up 20%, you don't have the money in your bank. You have to sell your position. No. In Forex, you're collecting interest payments, sort of like dividend payments, but I get paid every day, not every quarter. It goes directly into my account. Whether the price of the value of my asset goes up or down, it doesn't matter. It's like a bond. I get paid every day. Rent. What did I do yesterday for this trade? Nothing. What did I do the day before for this trade? Nothing. The day before, last week, last month, nothing. I didn't do anything, but I got paid cash. Not for my time, because I made a good investment decision. I own this loan. Okay? Now, on top of that, remember the real payout, the big payout, is not the income. It's the asset appreciation. We're not talking about a $20 million apartment building. Okay? We're talking about a loan to Turkey. Okay? Now, the value of this, the asset value, went from 0 to 100, so that's 100%, then 200, 200%, 300, 3, 4, 5, 6, 7, 8. So now the value of my asset went from $100 to $1,200. Plus I'm collecting that rent every day. And every day I do nothing. I don't reinvent. I don't show up to the market like, I wonder what I'm going to do today. I wonder if I should buy or sell this. Oh, look at that CPI. Oh, I made 22 pips. Okay. Well, X325, that's always the right question, right? X325? Always absolutely the right question. Except I've removed the risk. My stop is at break even. I don't have any risk. It's kind of like insurance. If your apartment building burns down and you don't have insurance, you're screwed. If your apartment burns down and you have insurance, you're totally fine. Now, Sammy says interest is going to fall. Yeah, okay. So now that's not a good thing, right? So the interest rate in Turkey is very high and they're scaling it back. That's true. And that may or may not be good for the lira. We don't know. We'll find out. It does mean my rent is falling. But think of it this way. Let's put it this way. You have this apartment building. Let's say it's an older apartment building, and you're surrounded by newer apartment buildings. And therefore, your renters are being attracted to the other renters, which means your rent is going down. You still own the building, but you might have to lower your rent. You're still collecting rent, but you collect less rent every month. Now, that sucks because it's money coming out of your pocket, right? But if you have a profitable scenario, you're earning less per month, but you're still earning money for free. Now, you have to earn enough money to pay all your expenses and pay the bank, because the bank's going to say, F you, where's my money? You're like, well, it's been tough. My rents are coming down. F you, where's my money? Okay? So if you drop below a certain threshold, you might have to either get out, you might have to sell your asset, or renegotiate your loan, right? But these are all real world concerns. So I thank you guys for bringing them up. I'm trying to take, an example of one market and show you how it's very similar in the other. That's how I think of this. This is my apartment building. Someone else does all the work. Someone else collects the rent, mows the lawn, fixes the leaky toilet, insures the property so it's risk-free. And what I do is I wake up in the morning and I definitely 100% got paid. And I don't know if the market value of my asset's gone up or down, but really that's sort of like paper money, right? Right? You see what I mean? Okay. Cool. Is anybody enjoying this webinar? Is anybody having fun? The stock market's about to open. Is anyone enjoying this? Should I keep going? I have another hour, but we can cut early. There's quite a few negative people today. I don't know what it is. So if this sucks, like you've heard it 10,000 times, or you think it's retarded, let me know. I can go do something else. But if this is awesome, let me know. Certainly don't want to waste your time. I have 200 pages I need to read this weekend for school. By the way, my professor, I'm doing a management consulting class. My professor graduated from some school. I don't know. It doesn't matter. Some non-real school. And he got his degree. And then he went, and he's a hard worker, so he goes and gets a big high-end consulting job at McKinsey. Works for 12 years for being a high-end consultant, right? Management consultant. McKinsey's a great firm. It's sort of like the Goldman Sachs of the industry. And when he's done, he's like, yeah, I want to go to business school. So he goes to Harvard Business School. Dude, just getting into Harvard Business School means you are the best. He graduates top of his class. Yeah, just getting in means you're the best. So he's better than the other 99% of the best. He's the best of the best. Then he's done with Harvard Business School, and he's like, yeah, I'm not really ready to go back to work. I really don't want to be a management consultant. I think I'll apply for law school. He gets into Harvard Law School, goes to Harvard Law School for 3 years, and when he graduates, he's top of his class. What? What are you talking about? So anyways, this guy, he's a hard worker. He expects a lot of things, and he's given me a ton of things to do. But holy crap, huh? Who does that? So he has top of his class Harvard Law School, top of his class Harvard Business School, and then 12 years working at probably the best management consulting firm. And now he's teaching me management consulting. But who taught me macroeconomics? A senior economist at the Fed. He actually worked at the Fed all day and then drove to class because he worked at the Boston Fed, crossed the Charles River into Cambridge, and taught me macroeconomics. And then went home. You're like, and then came back, taught me macroeconomics. Like, it's just, what an amazing school. So anyways, I got a lot of work. So if I'm wasting your time, let me know. I got a lot of things I can do. Cool. Looks like a lot of positive feedback. That's cool. Right on. Thanks. That was the best explanation. Big long-term. Yeah, cool. Based on fundamentals. Yeah, fundamentals and some luck, right? So we don't know. I need positive global macro to do that. So here's another trade the swing trading group did. Some of you guys that are in my daily webinars are on this, but that's the sell. Okay, this is a monthly sell, and this is a weekly sell. Some of you guys are on it, and this is where we are. Now, the interesting thing, like that, maybe that's just a good trade, and you're like, yeah, Wayne, that's just another lucky trade. Well, here's the interesting thing. This number here, okay, that says sell, and this number here. Okay, so let's put this together. On Monday, okay, if you were a seller and you were selling off of this, that was your target. On Monday or even Monday evening / Tuesday, if you sold here, this number means that. But the general strategy I teach every day for years is that in this area, this is where we're going. And yeah, some of you guys are on it. Quite a few people are on it. Okay? So that's pretty good. And that doesn't always occur. There's a couple of reasons for it. There's a video on YouTube I did. It's called How to Trade the Mexican Peso and Why It Works. And it breaks it down in detail. I did it like 2 or 3 years ago. The interesting thing is you cannot buy this currency. That's the clarity and the certainty is where the success comes from. I cannot, under any circumstance, buy this. But if I were going to sell it, this is the price. That's sick, right? Now, I'll add another layer that makes it cool. I only do that somewhere in this time frame. Like, you're like, it's a little too early. Oh, well, maybe in a couple of days. Yeah, okay, somewhere around now. And then you log in, you're like, yeah, that looks like the trade. That's the right price. I'll take a shot. And then it works out or it doesn't. But the thing is, you know exactly when and why, and you're ready, and you're patient, and it's coming up, and not quite yet. Wait for it. Okay, today or tomorrow I'll probably take the trade. So where is the price? Where is the resistance? Okay, there it is. Now you drop into a smaller time frame. You wait for it. Oh, you didn't get it today. Tomorrow comes along. There's my price. This is the perfect time of day, time of month. Everything's great. You take a shot, put your stop, and lo and behold, in a day or two, it's working out. Okay? And the thing is, I know what I'm going to do next month, and the month after, and the month after. Okay? And this hindsight nonsense that some idiot was talking about earlier, it's so amazingly blind. Amazingly blind. So this one is working out pretty good. Notice, though, it's also September. Meaning the previous months are less good, but we already expected that because of seasonality. So now we're back into this. Let me really blow your mind now. Okay? This is what we expected to be selling. And here's the actual outcome we expect. We're only halfway there. Now, if you're a bull on this, I don't buy it under any circumstance. But you certainly can. I'm not saying you can't. I just don't because it doesn't fit my strategy. But listen to this, if this is going up, I don't know if it's going to go up any more than you. But if I was a bull, let me tell you what I would do. I'd be buying this right now. Well, not right now. I'd be buying it either later today or early next week. Okay? Okay? That's not in my strategy. It's not what I'm interested in. But if you just wanted to trade this because you trade things and you're a trader and you like trading things, this is the extreme bullish entry. Let me say it this way. There is no better entry for the month of September if you're a bull on USD Mexican peso. Now, you're going to need some bad macroeconomic news. You're going to need Jerome Powell to say something bad. You're going to need a Trump tweet to follow up what Jerome Powell says and scares everybody. And then maybe Trump tweets about the whole visit from China in October. Vice Premier Lee or somebody's coming. They're like, we're going to cancel that. More tariffs, more things. And you know what? Bad global macro will mean this goes up. It doesn't exist yet, but that doesn't matter. We're not looking at what happened yesterday or what's happening now. If over the course of today and Monday and Tuesday, some scenario happens like that, then this is your price. 19.5736, and not a penny less. Not a peso less. Not even a fraction. Not even 10 pips less. That's the price. Now, if we can get a double bottom, higher high, higher low, well, you're either in the double bottom or you're in the higher low, and this is going to move up the rest of the month of September. Is that plausible? I don't know if it's plausible. That's your opinion. But I can tell you, what starts first is if it's going to happen, it has to happen at this price. If it doesn't happen at that price, I'm not going to buy it. I just don't care. Because technically it wouldn't make sense. And you'd be surprised how often things technically make sense, and then Trump sends a tweet. Okay? In which I do this and this. Okay? So I don't want to be a bull. That's irrelevant. I don't want to be a bull, but that's irrelevant. Okay? I don't want to be a bull. That's irrelevant. If this turns bullish, that's the price. Okay? Now your job is to use technical analysis to confirm or deny your bullish hypotheses. Okay? Okay? That's that. I think, right? So as a bear now, I'm like, that ain't going to happen, but this will probably happen. Actually, that's not actually good. What I'd rather see, here's what I'd rather see. I'd actually like it to bounce here. And then I'd like it to do that. Okay? So yeah, I'm a bear, and I want to see green candles. If I don't get green candles, if it's all red today, so whatever Jerome Powell says, and I'm telling you, Trump is going to follow it. Watch. Jerome Powell is going to say something, and then boom, Trump's going to say something else right on top of him. And one or both of those things are going to move the market. It may move the market in a way that it's too good for me. You guys remember when I talked about the 200 EMA? What happens if it's too good? What happens if I make too much money too quickly? It becomes a problem. Okay? It becomes a problem. This 200 EMA is going to move from here to here to here. Okay? But I'm going to be so far on Monday from this 200 EMA than I used to be. See how close it used to be? How close it used to be? How close? And all of a sudden I'm way down here and the 200 EMA is up here. What happens is traders get nervous. In particular, I think it would do it this way. Let me go back to this. I think it would do it this way. Then Monday would sort of be up and then drop down here. And that's just too crazy. That's too crazy. We're too far. And bulls will find a reason to snap it back. And you'll end up getting a counter trend. Okay? A trend trader doesn't want a counter trend. A trend wants the trend to last and 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 last forever, right? So you don't want to make money too fast. You don't want to make people nervous, okay? Or the bow's going to snap back, right? So I don't want that. So the funniest thing, and you're going to have to get used to this, and it takes a while, doesn't it? You have to get used to it. Say, I'm a bear, so I want this to go up. Maybe you should watch the movie Cars. You need to turn your wheels right if you want to turn left. You guys remember that? I know you didn't watch it. Your kids were watching it. But if you want this to go, if you want to sell this, you want price to go up. Maybe you should write that down. A fool would sell this. A good trader sold it yesterday or last week. That's what a good trader does. These are all obvious, all very obvious. These are front runs. These are swing trades. If you need to know how to do this, join the swing trading group, swing.fxbootcamp.com, or go ahead and wing it. Start a wing trading group. We log in every day and nobody knows what the heck's going on and we just make it up as we go. Or you can learn how to swing trade. Someone will just teach you and now you have this knowledge. Yeah, you can do it yourself. Sure, you can figure it out yourself. Take 10, 15 years to figure it out. Good luck. Okay? So we want up so we can sell it. Now here's the awesome thing. Bulls are like, I need the up. So maybe they do the up, down, up. But that actually doesn't happen. This move here is not bulls buying. So what makes it go up, guys? What makes the market go up if nobody's buying? What makes price go up if nobody's buying? I would argue that there are no bulls in the market, but I want to see green candles. I want to see green candles, but nobody on the planet is buying. Yes, actually, Keynote, this is how you do it. So so put it this way, Keynote. There's lots of training on FX Street and on YouTube and stuff. It's pissy little trading that they're teaching to young traders with not a lot of money. Okay, so for me to do that and say, here's how you scalp the 20 pips on the euro, and how do you do this on the news, and how do you do, like, all of that's been done so many times, and there's no real extra value, right? So I'm teaching you how to trade like an institution, how to think like an institution, how to plan like an institution, how to communicate with investors like an institutional firm would, and then, of course, how to put together trade plans and trade like an institution. If you make 30 pips a day, you're not collecting swap, so you're ignoring the fact that you could be being paid 1,000% a year. That's what an amateur does, says, I don't need 1,000% a year guaranteed return on investment. I'm more interested in making quick bucks so I can buy my yellow Lamborghini. Okay. All right. So lots of people are answering here. Sellers taking profit. Now, why would they want to take profit? How would you know that in advance? Would that be helpful to you? And the answer is yeah. I'll tell you. There is weekly resistance. Oops, let me get blackout here. There's weekly resistance here for swing trading short. There's monthly resistance here for swing trading short. There are two trade plans going on by different types of institutional investors. One, they want to be short all month, maybe all the rest of the year. I want you to think of that. Some people are saying, hey, summer vacation's over. What should we do with it? Sell it. Until when? New Year's Eve. But maybe just the month of September. There's one trade plan. That didn't come up. There. One trade plan, okay? The second trade plan is they want to be short all week. Okay? This is basic. Learn it on your first day swing trading. Okay? You can join the swing trading group right now, start watching the training videos, and know this by the end of the day. And then set them up with me every single week, live, as a group, to make sure you're on the clue train. Okay? You have a team and community of people protecting you. Okay? And quite frankly, making sure you're doing the work. So here's the cool thing, guys. Whoever sold here on the weekly M3 had a plan to get out here. So guess what they might do tonight, in the next few hours. Swap is interest payment. The interest you collect on a position. Okay, it's your daily interest payment. So check this out, guys. Whoever sold on Monday, and now it's Friday, we're hitting the exact price. I can't reemphasize that enough. The exact price that we expected on Monday I can't even quite see it. 19.567, I think that is. I mean, not the price. This is it. This is the price. So let's say in the next hour or two, they take profit. They're short. So when they say take profit, when they say take me out, Mr. or Mrs. Broker, hey, traders, wait, take me out of my profitable trade. Well, the way a broker does that is they execute a long position to offset your short position. Okay? And this goes up. Nobody's buying. This is such a powerful concept that I've showed people, and it's been a while now, maybe last year I showed people that the euro dollar went up for about 3 months. But I proved to people using the Commitment of Traders report that nobody was buying it. Let me say that again. About a year ago, the euro dollar went up every day for 100 days. And I proved with science nobody was buying it. It was actually bears getting out. And it had to do with a change in policy at the Fed. So it must have been right before Jerome Powell and stuff. But I proved it with facts that the euro dollar went up day after day after day, and it was traders getting out of dollar long positions. Had nothing to do with the euro. Nobody was buying. They were simply getting out. So then I said to people, well, what does this mean? Tons and tons and tons of people, like big institutional money making billions of dollars profit, they're getting out for profit, money in the bank, bonus time, year-end bonus, everybody. What do you think they want to do? Just psychologically, what do you think they want to do in the near future? No. Carly, you're misunderstanding me. It's the traders getting out. The mechanical way, Carly, is to offset your short. So, for example, Carly, I own an apartment building. You want to buy it from me. Okay? So I will give it to you. You give me money. You're short cash. You're long the apartment building. I'm short the apartment building. I'm long cash, which means I don't want the apartment building. I want cash. That's what I'm seeking. I'm bidding up cash and I'm offering my apartment, right? And vice versa. So for me to get out of my apartment and get into your cash, there has to be an offset, right? And that's what brokers do. And in real estate, there's always someone in the middle as well. Like, okay, here you go. The seller gives you the keys to the apartment, and here's the cash, and we give you that. And the broker in the middle keeps some for themselves. You know, the same sort of thing. So it's not that brokers are pushing up the market. No, they're making it neutral, which means there are less bears. Okay? And the price goes up because of the mechanical process of a broker, which is in the interbanking system. It kind of, exchanges and stuff do something similar. Okay? So it's not brokers like manipulating. No. They're not doing anything except executing trades. So when you say get out, they take you out. Well, how do they actually do it? They have to take that position out of the market. Okay, so it's not a broker doing anything. Okay, cool. So this drifts up because there are less people selling. Okay, think of it as an auction. Right? If there's less people pushing down the price, there's not more people buying. It's just less people selling. Okay? So anyways, so this drifts up for a while. And I said, everybody get ready. Get ready, everybody. Get ready. We don't know what's going to happen. We have to have a guess. We have to have a hypothesis. We have to have a bias. All these people made huge sums of money. What do you think they want to do sometime in the future. Like, they want to do it again. Hell yeah! They made tons of money. Of course they want to do it again. So we'll say, okay, well, now we have to guess. When are they going to re-enter the market? So we can look at seasonality here. We could look at like Fed meetings, like, you're right, these cycles of big news events. When will they come back? And so we start talking about that. And then at what price, if they come back sooner than later, what are sort of the current levels of resistance in which they may want to resell? Is it a psychological level? Is it a calendar-based thing like the next NFP or the next interest rate decision, like the next Fed meeting? Or is it more seasonal, like at the end of summer? But there's some logic to it. When would they like to sell again? Well, we don't know if they're going to, and we can only guess on when, but we can be prepared. And the preparation is called a trade plan. You can do some analysis and guess on the time, and you can find the prices based on technical analysis, and you wait. And at some point, because you have this thought process, you say, OMG. We're at the exact price and at a great time when I would assume euro dollar is going to fall again. And you start watching it, and at that exact time and at the exact price, it starts to turn south, and you fire for effect. You are ready, willing, and able. You are RWA, and you're going to carry this out. And all of a sudden, you go from kind of neutral and patient and waiting for you're trading this on a daily chart, a 4-hour chart, an hourly chart, a 15-minute chart, a 5-minute chart. You're boom, 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 drop, stop, drop, stop, drop, stop, boom, 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 drop, stop, drop, stop, drop, boom, drop, stop, drop, stop. And whether it's 15-minute charts lining up to hourly charts, lining up to 4-hour charts, you're using monthly pivots, weekly pivots, daily pivots, psych level, price action, moving averages, you are the most ridiculous, redonkulous, most aggressive bear on the entire planet. Right? Why? Because you planned for this to happen, and you have a belief that you understand why it's happening, and you destroy it. That euro is destroyed. Or every day you just make it up and, oh, look, I made 18 pips today. Woo-hoo-hoo, I made 18 pips. And then you're like, wait, 18 pips is hardly any money. I can't live on 18 pips. So then what you decide to do is, well, I think I'll increase my lot size. If $18 is enough, I'll put a bigger lot size and I'll make 180. And then you're like, 180 isn't enough, so I'll have to put more on so I can make, all of a sudden, you're on a path to total destruction. And what's the problem? Your plan sucks. Because the best you can do is 18 or 20 pips a day, and then tomorrow, or let's say it's 50 pips a day, that part is irrelevant. You made 50 pips today, good job. Now your analysis is dead because you took profit. You don't have any asset. You have no income and no wealth generating asset. You got paid because you sat in front of your charts for a few hours, and today you made 50 pips. Good job, man. And then tomorrow you log in and you lose 50 pips. But now you're out like 8, 10, 12 hours of your life, and what do you have to show for it? You took risk and you lost money. You made nothing. God forbid you lose both days. Like, I lost on Friday and then I lost on Monday. Dude, what are you doing? You need asset appreciation and income. You can't start over every day, start a new Forex business. What are we going to do today? I don't know, kids. Let's figure it out. Right? How many people do this, like the London breakout type of thing? Like, well, it ain't going up. I guess it must be going down today. Oh, my God. What a delusional idea. That every day you wing it. And you don't know what's going on, so you're like, well, I see green candles, I guess it must be down now. I guess I'll do that. And then if you're lucky enough to make money, you get out of your asset. Why would you get out of a winning trade? So let's boil something down to make sure that this diatribe is common sense. Okay. Ask yourself, are you supposed to buy low and sell high? Okay. I don't care if you've been trading for 10 years. I think you should take a pen out and go through this process. Okay? And say, I am supposed to buy low and sell high. Okay? The next thing, are you supposed to let your winners run and keep your losers small? Then you should write that down. Keep my losers small, let my winners run. If you are not finding the success you believe you deserve, it's likely those two things are not happening. That you got some weird, funky strategy with a really cool name, and maybe it's got an EA and it does it for you, and it's got fuzzy logic. It looks like 20,000 different variables, and it can make a oh my God. Wake up. Wake up. Wake up. One of those two things is messed up. Because you knew that before you even started. And for some reason, and I don't think it's your fault. Let me reinforce that too. I don't think it's your fault. You knew that when you started. Before you even opened up a trading book or took a course or watched a webinar on trading, you knew those things. You buy low and sell high. You keep your losers small, you let your winners run. Okay. So then you started research. What does this guy do? What does that gal do? What is this strategy? What is that strategy? What is this indicator? What is that indicator? What is this? What is that? What is this EA? What is that? What is this market? What is that market? What should I be doing here? What should I be doing there? And then all of a sudden, you've lost the most fundamental things that you already knew. You've lost the truth in the mass confusion that you ended up getting. And all of a sudden, you're kind of worse off. You know nothing about lots of things versus knowing one or two or three things and being an absolute total master. I want you to master something. Booker? No, I have no problem with Booker. I was at the FX Street conference. I think this was 2007. We're in Barcelona. I brought my wife and one of my babies and everything. It was really cool. And we had this opportunity to work with FX Street people and had a fantastic time, of course. And so anyways, I do my presentation, and Rob Booker's at the back of the room, and he sat at the back of the room for the whole thing. And it was all done and everything, and it was my turn to sit down. And Rob turns to me and he's like, "You really give them a lot." I said, "Yeah, Rob. In fact, I give them everything." And he looked at me and he's like, "Yeah, that's cool. That's cool." Yeah, like, yeah, totally. So anyways, so it's not your fault. You're trying your best to learn, and there's so much. There's so many different ways and stuff. But I think it was the Zulu effect. Isn't that what it's called, where you study something for 10,000 hours and you become an expert? Okay? I would teach you buying and selling at support and resistance and letting your winners run for 10,000 hours. In fact, that's all I actually do. For anyone that's been with me for 14 years knows that that's really all I do. You have to know where to buy and sell. That's support and resistance. And then with proper targeting, which you need leading indicators for that. If you can't see the future, you can't have a target, right? So like if you know how to use a leading indicator, you're like, well, this is where my stop would go, and this is where my target is. This is like my profit target. And all of a sudden, like, you have the basics that you always knew. You always knew that. That's so when I started, I was a venture capitalist. I never traded financial assets on a chart like this. In fact, when I became a Forex trader, I didn't even have charts. They weren't available. Traders didn't have charts. So I didn't learn all this mumbo jumbo, Forex is a video game nonsense. I trade on my MT4 on my account. Look, I just bought a yellow Lamborghini. Like, dude, seriously, who believes that nonsense? Okay? You have to understand the how and why. And once you understand the how and why, then you need to have the right tools. And then you need to understand how to use them. And the rest is nice, right? Yeah, Jimbo, like, okay, so if Rob has a new EA every month and so does Boris and Kathy, you know, I know these people, right? I know these people. I remember one time I was at the Traders Expo in New York City, and I think Boris and Kathy were at FXCM, or maybe they just moved to GFT. Can't remember. But anyways, I had been doing videos on YouTube. I was the first person to put videos on YouTube. There was a time when like the first 12 pages, and each page had like a dozen videos. If you typed in Forex on YouTube, it was like the first 12 pages were just all my videos. And one time, Boris and Kathy came by and like, hey, you know, we saw you were doing videos and they look really good. What software do you use? Like, and I'm like, oh, well, I use Camtasia Studio. And this is, you know, I gave them all my secrets. And like, that was really good. And about like 3 weeks later, they're posting videos on YouTube. And like, I helped them. This is what I do and why I do it. So like, I know these guys. I don't have a problem with them. But what I'm telling you is I have not changed in 14 or 15 years. I haven't had to. Never needed. Don't need any new tools. Don't need any tricks. I'm not saying that's what they do. I'm just saying I don't know what anyone else does, to be honest with you. I used to feel very insecure. I'll give you 2 examples of how I felt more confident in myself as an individual trader. I used to feel very unconfident in myself. And that's because I'm self-taught. I really don't know what other people do. I really don't know what other people do. Nor do I really care, actually. But the very first Traders Expo, they said, would you like to be a keynote speaker? And I'm like, okay. Yeah, okay. I'm just an independent trader, trading my own money. I used to be a venture capitalist. I don't know, I guess. Sure, I'll speak at your conference. So they put me on the homepage and everything with other speakers, probably with Rob Booker and Boris and Kathy too. But we go way back, right? So anyway, so I go to this thing and I'm like, okay, I need to teach people something. So I put together something called a SMART plan presentation, which later led to my book, right? So I put this together. I work on it really quite a bit. I was really nervous about doing this. I really felt inadequate, really. Because I didn't know what other people did, right? So anyways, so I go to this conference and I put this together and people seem to love it. They're like, that was great. That was so helpful. How did you use speed and market and all that? Thank you, Wayne. That was really good. And I'm like, hey, glad to help. But then when my presentation was over, I'm like, wow, this is my first conference. Well, the funny thing is, it was the first ever Forex conference. So I'm like, okay, cool. I need to go see what other people do, because I don't know what other people do. I thought they were the real traders and I was just some young poser almost, right? So I go to the first one and I stand at the back of the room and I can't even remember who these people were. I probably know them now, but I don't remember who they were. So I go in the first one and it's a panel discussion. And it is whether fundamentals or technicals work. I'm like, that's really strange because they both work. But anyway, so I go in there and they're debating back and forth, and two speakers were really going at it. No, it's technicals only. All I need is price. The other one, no, it's all fundamentals. That's where trends are born. And they're like making a big show of it. And I'm looking around like, dude, these are all amateur traders. And they're trying to learn, and this is really confusing. I don't get it. So I put up my hand, and they say, you at the back, because I'm way in the back. I'm standing up. I put up my hand. I'm like, everybody here is a retail trader, and they're trying to learn how to trade. You guys are arguing over which one is real and which one is best. And I'm like, wouldn't you recommend to new traders that they should have a healthy understanding of technical analysis so that they can understand how to time their trades and stuff, and also a healthy understanding of fundamental analysis so they know sort of like the flow of money and economics around the world? Like, shouldn't you understand both and be comfortable with both? And the room just went dead silent. And then they're like, no, and they went back to their big spiel. Funny, techie, funny. And I'm like, oh, wow. And I got up, and I think half the room got up and left. I'm like, that was really weird. That was the first presentation I ever saw about Forex. So I go to another one, and this one was like Gartley patterns or the butterfly effect or something that he talked about. Of course, he was just doing butterflies or something. So I'm like, okay, this looks like a real trader. Because I'm not a real trader in my mind. I feel inadequate, right? So I'm like, this is going to be great. So I go in, and sure enough, the guy is super scientific, and it's well-documented presentation. He's got really hardcore charts, and he's like, this has to be 22-degree angle, and if so, that will be a 19-degree angle, and this will be this other angle, and then if you do this and you do this, and he's going in, and it's very ridiculously complicated. And I'm thinking, oh my God, I do this wrong. I'm like, this guy's destroying me. This guy's like an engineer. And I'm like, I look at it and think, I should just buy the dip. And I'm like, and that previous high looks like it'd probably be support in the future. I would just buy the dip. Like, I just look at it and I'm like, I just buy the dip. This is clearly going up, so I would just buy a dip. And I'm thinking, I'm so simple-minded. I'm just like a moron. And this guy is a genius. He's doing things I would never have thought of. And he's trying this great thing. And then we're about 45 to 15 minutes into this 1 hour presentation. And guess what happened? He stops. And it's silent for like a minute. He doesn't say anything. All of a sudden, like a bead of sweat forms on his forehead. And he looks at the audience and says, I'm sorry. I've made a mistake. The slide is wrong. And it would take too much time for me to correct it and re-explain. So I guess we're done. I'm like, what? There's 10 minutes to go. And he's like, yeah, this is totally wrong. I got I guess we can take questions. And I walked up, and I'm like, oh my God, I would have just bought the dip. Done. Less than 1 second. So now I'm like, I think I could out-trade these guys all the time, right? So anyway, so I leave really confident, and I go to a whole bunch of other trade shows and stuff, but I've never been to another presentation. That's the thing. I'm like, I'm done. I don't need to know what other people do. I know what works. This works. And it's simple to me. Maybe I'm simple, but I know that doesn't work, and I know what I does. So I've never changed, right? The second time I gained sort of inner confidence as I was on the trading floor of the Chicago Board of Trade, and you go through security and all this kind of stuff. It's a real big deal. Tourists can't do this, right? So I go out, and I'm hanging out with a professional tenure T-note trader. He's like, you should come on the floor with me. So I'm like, yeah. So I'm on a plane. I fly to Chicago, like, boom. So anyway, so we go to the floor, And we go through security. First of all, you have to go to the big old buildings, fantastic. And then you got to go to security. And then you got to go up these elevators and all this kind of stuff. And then you go through sort of a crowded room. And then all of a sudden you're like, pow! You're in like a football stadium. And pow! And lights are going ding, 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 ding. And traders are, yeah. I'm like, oh my God, where am I? And I walk right into a pit. And I'm standing in a pit. And I'm in soybean meal futures pit. I'm like, oh my gosh, I'm on the floor, right? And he's like, come with me. I'm like, no, this is great. I'm looking around, and the room is so big, and there's so much stimulation going on that it was hard to even focus. Like, what is all this? And it's so big and so massive, and he's like, no, this is the old room. This is the small room. This is the floor they traded 100 years ago. That's why soybean meal futures, nobody trades soybean meal. Let's go over here. And he turns me this way, and holy crap, there's a room 10 times bigger. And you walk in, and he's like, over here is the S&P 500, and behind that is S&P 500 futures. And over here, I think it was gold or something. And over here is the 10-year T-note. And these guys do this, and these guys do that. And I'm like, oh my God. Oh, this is so awesome. And so I spent the day. I'm in the S&P 500. And they're doing things. And then the open was over. It's in the beginning, it's like ding, ding, ding. And people go crazy, right? Buy, sell, buy, sell. Whoa. And they're spitting on each other and yelling and screaming. I'm like, fuck. And so anyways, that lasts for a whole rockin' 20 minutes. And then they all calmed down. Then they started hanging out and telling jokes to each other. One guy was telling totally inappropriate jokes. Another guy was reading his newspaper. And it was ghost town. And what happened? And they're like, yeah, well, they traded the open. Everyone got their orders in. Huh. Now there was 6 people kind of buying once in a while, 6 people kind of offering. And everyone else was goofing. I'm not joking, goofing, sitting, reading, bullshitting, talking about sports, whatever. And it got dead quiet. Huh. So he's like, okay, come with me. I'll show you my pit. So we walk over to the 10-year T-note pit, and it's like a Starbucks. There is no arena. There's just a bunch of computers. And so he has this computer. It's just a space long enough. He has a computer. And I don't think there was even a chair. And that's it. And you can stand there and you go Ed, what do you think of the market today? And he's like, meh. And you check your positions, everything's good. And then you go over, hey Billy, you got some trades on? What's cooking, buddy? And they're all bullshitting with each other, and they'll lie to each other. He's like, yeah, I think I'm going to buy at the close. Oh, really? So then he comes back, yeah, Billy's going to sell. He's a big seller. And then he showed me on this chart, he didn't have charts. He showed me on his the positions, and he's like, see all these orders? He had the ladder. He's like, they're all bullshit. I'm like, what do you mean? He's like, you'll get 1/1,000,000th of a tick from that, and those orders will disappear. They're all fake orders. They all say, we want to buy, we want to buy, we want to buy. When you get there, they're not there. They all just, at the millisecond, disappear right before you touch. So they're trying to get you to do something. They're trying to get you to sell because they're selling on top of you. And they're all liars. And it's really weird. And so anyway, so I go through and I'm looking at what they do, and I'm looking at, and it's weird, right? It's so quiet. And I spend the day watching the traders trade. And it's weird because this pit has certain rules, and this one you can carry computers, that one you can't. You have to call your orders up and all this stuff. And I walk around and I look at what they do. I watch how they do it. I see them trading in the spreads. I see them at the open. I see them at the close. And when I leave, I had such an amazing feeling. I was almost shaking as I'm walking down, was it LaSalle Street? The day was over. And it was so important to me as a trader because before speaking as a professional, I didn't feel confident in myself because I'm self-taught. Well, after leaving the floor, I knew for a fact I could trade against these guys all day, every day, and win. I had total confidence in my knowledge and my ability. I thought, like, those guys were real traders, or the speakers at the conference were real traders, and I was just sort of a poser, right? And now I'm like, I can destroy that speaker. I can destroy that floor trader. I have total confidence in my abilities. And that was so important. But I had a clarity of what I do. And I know how I do it. I know the tools. I have absolute total clarity because the clarity comes from intention. I do not sit down at my charts and look for a trade. I know what I'm doing Monday, Tuesday, and Wednesday. I know what I'm doing. I know what I'm doing in January. Whenever you want, there's an interview on FX Street. 1 hour interview with me. I'm in the Caribbean, about to meet with the Central Bank of the Eastern Caribbean. I'm wearing a 3-piece suit in the Caribbean. Yeah, stupid, but I also think it's appropriate when you go meet with the Central Bank. But I spent an hour, even though I'm in the Caribbean with a volcano behind me. I'm like, yeah, FX Street, I'll sit down for an hour with you, even though I'm on my way to a Central Bank meeting to meet with the Central Bank, not to watch a meeting with the Central Bank. Yeah, I'll spend an hour with you. And so in that hour, I talk about all the positions I built up and that I'm getting ready to dump the whole thing. And I said, it might be today, it might be tomorrow, it might be next week, but I'm definitely dumping the whole thing. And literally the next day, the market dropped. And I said, yeah, it's going to fall to the third week in January. Then there's going to be a bounce, but it's going to be a false bounce, and then it'll resume its downtrend. I'm going to do that all the way into the March and then probably into the June meeting. And I gave a week by week overview of how I built up all these positions. Even though I've been long for 4 or 5 months straight, in the next couple of days, maybe 2 days, maybe tomorrow, maybe the next day, I'm going to dump the whole thing and go exactly the opposite. Watch the video. It's on FX Street. It's probably 2 years ago, maybe 3. And then go back and watch what happened in the market. It'll just destroy your idea that it's all hindsight. Just destroy it. So I know days, weeks, months, what my plans are. I don't know if the market will agree. But I know what my plans are, and I have intention. Now, when you have intention, you have clarity. When you have clarity, you do not miss things. You might be wrong, but you'll know very quickly you're wrong. But when you're right, you have total confidence because you knew it. You planned for it. You were ready, willing, and able, and then you did it, and you fired for effect, and you destroyed it. I didn't say, oh, I'm thinking about buying the yen maybe sometime soon. In the next maybe today, maybe tomorrow, maybe early next week, I'm going to buy yen. But not just buy yen, I'm going to get out of every single yen long trade I've made for 5 months. I'm going to take my entire portfolio, dump the whole thing, and then go the exact opposite direction. Not for a day, not for a week, not for a month. Total annihilation. But by the way, that's how institutions trade. They don't wing it, and they're not interested in the last 15 minutes. What am I going to do now? Oh, look, I made 12 pips. I made 22 pips on this euro short. Just not interesting. It's not even worth the time, yet alone the risk. So I want you to think big. I want you to think bigger. I want you to think that there are opportunities right now that I showed you that pay you 1,000% a year guaranteed, plus asset appreciation, like an institutional investor would if you're a venture capitalist or if you're a real estate investor or some other professional investor. A bond portfolio manager is going to want asset appreciation and income. So why wouldn't a Forex trader want asset appreciation and income? Well, if you don't let your winners run, There's barely any appreciation. Oh, I made a quarter of a penny. A quarter of a penny. Right? Asset appreciation and income. And then have this bigger idea of how the market works. And by the way, the central banks tell you exactly what to do. That's called fundamental analysis. Cool. Okay? But then, you have this big picture. Where you should be going. You have a vision for the future. Now you don't need an incremental change. You guys understand me? You don't need an incremental change. You don't need to improve. Okay? If you're struggling with break even, or you make a little bit of money, and you feel like the only way to make big money is to increase your risk by increasing your lot size, no. Or if you struggle even to be profitable, if you're struggling to get past break even, if you're struggling just to have more winners than losers, let's say, then you don't need an incremental change. Don't start looking for if you can be 8% better, if you can be 10% better, if I can just get in my trade a little bit earlier, or if I just had a little bit better of an indicator. Okay, those are incremental changes. If you struggle with being profitable, you don't need a little bit better. You need to destroy everything that you have been doing and everything you think you've been doing. And you need an absolute total revolution in what you're doing. And that comes from a pure understanding of how the foreign exchange market works. And then it'll come down to, do you understand support and resistance? I bet you do. I don't know you, but I bet you're probably pretty good at identifying basic levels of support and resistance. Where you say, Wayne, that's resistance. Wayne, that's support. I bet I shouldn't say that. I am certain the vast majority of you can do that. Then the next thing is you have to have a trade plan. Because if you don't have a trade plan, you don't know if you have winners. You don't know if you have losers. You're winging it. If you have a plan, you have certainty. You have a vision of where you're going. Well, to have a vision of where you're going, there's more to it than where you've been. That's price action. You need like a pivot point to say, well, based on this entry, there's your exit. You have to have a target, which means you have to let your winners run. But that's all we're talking about. I'm just asking you, do you believe you have the capability inside of you? Is your brain powerful enough, right? Not everyone goes to Harvard. Not everyone graduates with honors and all that kind of stuff. But do you have enough gray matter and capacity and intellectual power to identify support and resistance? I think the answer is yes. I think I think you believe you have the capacity to do that, which then could lead to capability. If you don't have the capacity, forget it. If you have the capacity, then you can learn the capability. It's just a skill because you would understand it and then be able to carry it out. Okay? And then the next thing is, can we manage your risk so that you don't take a lot of risk, but you also, because you have confidence in your plan that you did through solid analysis, you have the confidence to let it run. I bet you these 25 pip trades you're making, I bet you a lot of them are worth 100 to 200. Some cases beyond. But you never knew. Because you're like, I gotta be profitable. I gotta get this money. This is over $200. I gotta take it. But you're destroying your destiny. You're destroying your destiny. You're worth more, and you know it. So at some point, I want you to sit back, maybe over the weekend, have a cigar, and think about your future, and then think about your past. If you know you have the intellect, you have the capacity to identify support and resistance, and you also know as a truth that you have to let your winners run, then you need to have the courage to be in a revolution. You need to revolutionize what you do. You don't need an improvement. If you look for an improvement, you will continue to fail. And the worst thing is it'll just take you longer to fail. You don't need to be 5% better. You need to stop everything. And you need to seek the truth. So at my school, at Harvard, they say it's veritas. Okay? On the shield, I did this the other day. I can do this again. This is really interesting. I carry it with me, and I find it important. Oops, let me turn my drawing tool up. Let me explain this. This is actually really cool. Okay. So this is for my first degree, I got my ring. Okay. You see those bumps? It's kind of hard to see. Those are 3 books. 3 books. And on the books are letters that spell out veritas, which is the truth. The truth through knowledge. You don't need another indicator. You don't need to get in a little quicker. You don't need to put more lots on your trades to make real money. You need the truth. You need knowledge. You need to know how the market works. Then I'm telling you, you'll need support and resistance, and you need the winner's run. You don't like moving averages? Don't use the moving averages. Don't like pivot points? Don't use pivot points. You prefer CCI over RSI? Use CCI. It would not matter at that point. So like I told you in the beginning, I move my indicators or I adjust my indicators to tell me the information I need to make an informed decision. I don't look at it and say, well, MACD told me to buy it. MACD doesn't do crap. It's an algorithm. The math does the math and it paints little lines on your charts. If you don't have the truth, it's worthless. Okay? So after you know how the market works, when you can say things like, well, I'm a buyer now, but in January I'm going to be a seller. I mean, that's where you need to get. But that's knowledge. You need real knowledge. Okay? You need real knowledge. And from that, you can use anything that you feel comfortable with. It's not the other way around. If you've been using indicators and someone's told you the indicators will make you rich, but you really don't understand what's going on or what the indicators are telling you or all that kind of stuff, it's nonsense. It's not going to help you. So, I don't know. I think you need a revolution. You need to revolutionize what you've been doing. And some of you guys have been trading for years and still haven't found success. That's because you're looking for an incremental improvement, a marginal improvement. And that's the wrong strategy. I hope you believe me. I do webinars every day for Traders Way clients. Every day for Traders Way clients. Go to tradersway.com, open up a demo account. There's a link in the back office that brings you right to my webinar every morning, 8 o'clock in the morning, New York time, for free. Compliments of the firm. Open an account to Traders Way. If you need training, education, all that kind of stuff, hey, I'm not trying to sell you. It's just they're there. If you need help, they're there. FXBootcamp.com. But you can hang with me every single day for free. Okay? If you want to join my swing trading group, we set up these trades just like the one you're looking at. We set that one up on Thursday. Every Thursday we meet to set up trades for Monday. Every Thursday morning, we set up trades for Monday. If you can't see it on Thursday, you're sure as hell not going to trade it on Monday. So that's why we do it. We plan on a regular basis 72 to 100 hours in advance. If you want to join that group, swing.fxbootcamp.com, and it comes with the training course. You used to have to take the $1,000 training course first, then pay money to join the group. Now you get the training course for free. So now money's not the problem. If you want the knowledge, step up, take it. Or go back to doing what you've been doing for the next 5 years. Good luck. Hope you get that 5% improvement. thank you to our wonderful hosts, FX Street. This is the 161st month. 161 months of this one webinar. And I've been doing things with them for years before that. So this is really a special relationship. So thank you to FX Street. I noticed the moderator posted the link to the video where I'm in my three-piece suit with a volcano behind me. And I tell you exactly what I'm going to do, why I'm going to do it, why I built up my positions, and why any moment from now I'm about to dump the whole position and go the exact opposite way for not just a little bit. But I tell you, in this week I think it'll go up, and that week I think it'll go down, and I'm already preparing weeks in advance, weeks in advance. Watch the video, or just skip the video, join the swing trading group, and I'll teach you how. Okay? Thank you, guys. Peace on earth. May the pips be with you. May your profits be above average. Have a wonderful weekend. I really hope you sit down and have a meditation with yourself. I want you to think about what you're going to do to revolutionize the rest of your life. And I think you should stand up and throw your fists at a marginal change. A 5% improvement on a crappy strategy is just 5% crappier. If you don't understand, it's never going to work. Ever. But once you understand, you can do any methodology you want. Anything you want. Anything. And you'll be successful. Because you have the knowledge, you have the truth, and you can plan ahead. So that's what I would think about if I were me. I'd have a business planning retreat for myself, and I would stand up and I would be pissed off. And I mean, you're missing the best markets of the year. If you miss the next 3 or 4 months, you've just thrown away a whole year. So time to wake up and get angry and then do something and say, no more mediocrity. Seriously, this is the nonsense I do. I do this all the time. All right, take care, guys. Peace on earth. May the pips be with you. May your profits be above average. Thank you to the moderator for doing a fantastic job. Thank you to FX Street for hosting us for these 14, 15 years. I've been working with them. Thank you for Trading the News and all that kind of stuff too. Peace out.